on YouTube. Give it just a second, and we'll get that thing rolling up for you guys. And we'll get our first guests in the show and get it ready. So give us just another minute or two, and we will roll this thing out. We're going to get the Aerodrome and the Syndicate team up first to talk about the state of metadexes. Ba-dum-bum-bum, boom. So that should be the first segment, guys. Pretty stoked. And we'll get them up in just a sec. We're just gonna roll through on the actual front end just to get YouTube rolling. Guys, it's been a great week at the Rollup TV. We've had amazing guests. I think the highlight of this week was 𝘗𝘳𝗧𝗟𝗓, the CEO of Circle, came on and spoke for a good 35 minutes about their push into Hyperliquid. It is a very trippy setup when the CEO of a massive public company to the tune of $30 billion market cap, which unironically is somehow less than Hyperliquid's FDV. Don't ask me, crypto token prices are not, rooted to reality. And came on and just gave a pitch about why Circle wants to get involved with Hyperliquid, which is just an amazing paradigm shift around how these networks have been, built, thought about, and executed on. And so up next, we've got the CEO of Aerodrome, Alex. We've got the CEO of Syndicate, co-founder, Will. It should be a great segment. Basically, the concept that I want to understand in this segment is understanding metadexes, how this new form of launch is different from the traditional pool 1, pool 2 model, what the exotic kind of VE aerodynamics play, how sustainable this is, and just kind of like what we're thinking about when it comes to community first launches in crypto. So don't mean to make them wait for too much longer in the back. Just getting YouTube firing up. Should be just a sec, and then we will get them in the show. So Rob, I think we're ready to go. Guys, we're going to bring them up. And
there we go.
Here we go.
Guys, welcome to the show. It's a pleasure to have you on. Incredible mainnet launch, community-oriented. I think it kind of took a lot of people by surprise, including us. And so we're here to provide some educational opportunities for our audience to better understand what happened here. But first, happy Friday, guys. Welcome to the show. I think it's your first time on. Thanks for being here.
Thanks for having us.
Thanks so much. Great to be here.
Yeah, guys, actually just real quick, first time on the show, first time meeting you. Quick intro, Alex. How'd you find Aerodrome? How'd you get involved in the base ecosystem? Will, what brought you into the deep technical realms of building L2s with very customized, high quality stacks? And then let's just jump right into it after that, please.
Yeah, make it a quick intro. Like many people, I think in DeFi, crypto, anything but a linear career journey. So got involved in politics when I was a teenager, went to work big tech for a period of time, did some consulting, was locked in my house in the pandemic, got pretty addicted in DeFi summer, all things DeFi, like so many. Quit my job, didn't have a plan, but met some other really smart people in a DAO on Phantom. That DAO, I think, was sort of the genesis of Velodrome, which is the largest exchange on Optimism and the broader superchain. Velodrome led to Aerodrome, and Aerodrome has led to today and being here.
Well, I'm glad somebody took Andre Cronje's ideas and made them work actually in practice long term. Thanks for being here, Alex. Will.
Of course.
Yeah, absolutely. So I got into decentralized tech in 2013. I was doing mesh networking research one summer at the MIT Media Lab, found my way to Bitcoin in 2013. I did some experiments, but you couldn't program it. So I found Ethereum in 2014. I was like, whoa, you can program it. That's cool. So I took my $10 Coinbase sign-up bonus and I put that into the Ethereum presale. If I'd put $100 in, I could have gotten a house in the pandemic in 2020 like Alex, but I did not. So hindsight 2020. And then from there, my co-founder Ian and I, we started Syndicate based on ideas we had all the way back in 2018, working together at IDEO. We knew that more communities needed to come on chain. We didn't know how at the time. We knew that it was inevitable though. We did some work in investment DAOs that led us to other types of on-chain communities like Decrypt / Radio, FWB, and Nike. And we were working with Nike at their scale. hundreds of thousands of users. Everything broke. On chain, off chain was fine. Everything off chain was great. On chain, gas was spiking to $1. And it was very, very clear that existing chains could not handle what crypto needs for mainstream adoption. That brought us down the L2 and L3 rabbit hole. We saw a lot of issues with their centralization, the way they're unaccountable, the way they're, in some cases, basically like, people paying credit card bills to AWS, and if someone stops paying the credit card bills to the RAS provider, it all gets deleted. That's not the future of crypto we saw in 2013. That's not the future of crypto we wanted to make happen. So we built a stack that decentralizes these rollups, allows anyone to run sequencers, stores the data on-chain rather than off-chain, and to keep that community-first approach. In addition to the rollups being run community-first, we wanted to run our token launch in a community-first way too. And that's where Alex and I and my co-founder and our team started jamming.
Yeah,
Amazing.
absolutely. And I think anyone who heard about this beforehand didn't really understand like the gravitas of it. I heard about it, kind of talking with Ian a little bit, but then also I was at Basecamp. I think Alex, you might have been at Basecamp as well this past week. And maybe Will, you were there too. And Jesse was talking about this on the show as one of the more innovative launch patterns that could occur going through Aerodrome in this way. And then boom, it took off. Aerodrome put out a tweet. LPs within this 4% price range are getting 85,000% APR. So,
Dude, that is better than yams.
Better than yams back in DeFi summer.
Alex knows.
Help us like wrap our head around this, and maybe you could unpack how this works, why it makes things more community oriented, and generally some of the things that people, some misconceptions that might be at play here.
Yeah, I'll set things up maybe at the top here. So, Aerodrome's a meta DEX. What a meta DEX essentially is, right, is a DEX that combines the best of Curve, Convex, Uniswap, all into this single streamlined design. And core to that design is a token that is maximally useful, right? So 100% of the revenue that the DEX produces gets redistributed back to 𝘂𝘃 voters each week as incentives for their participation. And this is a sort of economic tissue that is very, very important, right? Because each week the voters distribute all the new tokens, the emissions, to pools, and they earn back all the revenue that the DEX produces as incentives for doing that critical function. So how does this intersect with the idea of a community launch, right? And why is this only possible on a meta DEX? Well, think about the journey that most projects have to go through in leading up to a launch. They need to build liquidity somehow. And that usually means you have to allocate a certain percentage of your supply to a market maker, right? And we know there are extremely predatory market making deals out there where now a project has given up a ton of their token supply to a market maker. They got liquidity on it, but you'll see in the charts what happens next, right? This is not necessarily giving it to the most aligned group. And what you also see is centralized exchanges coming to projects who want that distribution from a centralized exchange, but they have to give up anywhere between 5 and 15% of their initial supply to that centralized exchange to access that distribution to their customers. And so what we pioneered here with the community launch is really putting 𝘂𝘃 voters, right? The core people at the center of our system, the people of locked tokens who participate each week at the center of this process. So the syndicate team, instead of giving up 10, 15%, to a centralized exchange, they gave 1% of their supply with no price yet to 𝘂𝘃 voters. And 𝘂𝘃 voters were then able to take a week and say, hey, how much voting power should we direct to this? What do we think this token is worth? What is my incentive to vote for it? And I'm sure will talk about this, but did some pretty incredible due diligence, right? And pushed the team and gave amazing feedback, but they ended up directing, over $1 million worth of aero emissions to this pool. And in return, they got that initial 1% of the supply. Now, this means they were also the ones seeding the initial liquidity pool, because there was an infinite, sort of APR, and then somebody adds $1,000 and somebody else adds another $1,000, and then people start trading into it, and the pool grows and is larger. And so essentially the market made itself, right? And we've got millions in liquidity on this token. I think it did close to $50 million in volume the first day. It's on track to do well over $1 million in fees in the next week. It's really unbelievable. But the one last thing about this that I think is so revolutionary is because Coinbase has directly integrated DEXs like Aerodrome into their front end without Will or anybody on the syndicate team needing to pay a centralized exchange. It was live to trade on Coinbase within 1 hour. 100 million users, right? So the market made itself through this distribution of 𝑉𝑒 voters, and they essentially got what is a listing, right? Instant distribution to 100 million Coinbase users. So we've disrupted, I think, 3 major verticals, right, of how typically launches are done, the way in which values extracted out of those launches, all in this sort of fair, permissionless way. And I think it is something totally new. I think it is something that can be replicated, and that is to the benefit not only to like the platform in Aerodrome, right? And 𝘱𝑒 voters earned close to $20 million worth of incentives in this 1 week, which made Aero the top revenue producing product in crypto, period. More than Hyperliquid, more than Pump. So there's a benefit to our system, but there's also a benefit to projects and protocols because they had to give up actually far less than they would have through all these centralized and permissioned means.
That is absolutely insane, guys. And when it comes to actually seeing this play out, when you're looking at the metrics on chain, I mean, there is, as you said, there's $50 million yesterday. Right now, it looks like there's 6,000 holders. The only question that I'm a bit concerned about on the model, Alex, if I was to push back on whether this is really truly, democratizing access or just really whales getting wealthier, is the 2 largest LPs are 34% and 33% respectively of the pool, meaning that the majority of the 875,000 Aero rewards over this week period are going to 2 entities. When I checked yesterday, it was 1 entity had about 95% or 98%. What do you have to say about the concentration of where the yields are going to those in the pool? And I don't mean to pick on you. I'm just curious.
I mean, the thing that's I think important to note is that in Aerodrome's system, the emissions only flow to the active tick of liquidity. And so it is always a intense competition to remain within that active tick. So when you might look at the total pool composition as potentially very concentrated, if you think about the prices moving, and it's been very volatile, this is price discovery, right? And that rewards are shifting across that active tick. I don't think there's any one centralized party who's going to be able to soak up everything with how fast things are moving. And the initial voters, who went in and provided that supply, was probably one of the more fair and equitable sort of distributions. But I think it's going to be fierce competition to stay in that active tick, and it'll probably change moment to moment, even while we're on this call, as to who's able to maintain that liquidity in the active tick, and then people position on either side. And I mean, it's a really, really kind of fun dynamic, but it is one that ensures, that syndicate and whoever's willing to take on that risk is able to get the most reward.
Yeah, and this was a risk because this was a token launch model that hadn't been tried before. There was things that could have gone wrong. Will, when you were kind of but it didn't. Overall, yeah. It was I it was a risk. Got the attention. You got Alex just said, 50 million in trading volume, on pace to do quite well in terms of volume and fees. So Will, this was a success, but there was plenty of things that could go wrong, which is the case anytime you're doing something novel and new and unique. When you were looking at the token launch models that are out there, surveying market maker deals and all of these things, what were you trying to accomplish when you set out for a token launch, and ultimately how did this tick the boxes and ultimately overcome those risks that you were taking into account?
Yeah, so it definitely was a risk. I mean, Arrow was the only token that launched like this beforehand. It was a very different market, very different dynamics. And Alex, your team is, very upfront, very blunt. They were like, we've approached a lot of people about this, and they've all said no. And we're like, well, we are open to this. We are open to this kind of risk. And we were like, we'll take the leap because this is who we are and this is how we do things. We don't want to play it safe. If you look at the traditional launch options, there's 3 major traditional launch options. One is the centralized exchange route and, the large airdrop route that, we're all very familiar with. That's probably the most common one. So people give out a bunch of tokens to centralized exchanges, and those centralized exchanges give it to their top traders. So basically the traders are paying fees to centralized exchanges, and they get paid back, so to speak, with project tokens that they can then, do as they wish with. But they're traders, so we know what they do with them. Then there's also a bunch of tokens given out in a widespread airdrop. Sometimes if you happen to talk about them on social media or use them early. And the issue with this launch strategy is that it's pretty inefficient and unaligned. So I'll start with the inefficiency. So if you do a massive airdrop to all your holders at once, then anything you want to do later, you're stuck. Like you've already given away all your tokens. You've already used up all of that flexibility on day one before you know how anything's going to play out. And it sometimes goes to aligned holders and it sometimes doesn't. So the initial community you're bootstrapping with is not necessarily the community that's going to be using your protocol and providing a lot of help and a lot of good to your protocol. The second option is auctions. There's a bunch of great bootstrapping options for that, where the auctions are used to bootstrap the liquidity pools. That's common in a lot of meme coin launches, for example, where they'll take a bunch of money and then they'll use that to seed the LP. But the issue with that is that you're collecting a bunch of money from people in cash. You're giving them tokens back, but it can lead to worse market discovery as a result, because people are having to put up a bunch of cash and decide what to do with it. And also people are paying a bunch of cash and then it doesn't go to the project. So the project gets a bunch of inflated expectations without the corresponding capital, which is not a great place to be either. The reason why we really like the Aerodrome launch strategy is it's effectively a lock drop. I don't know if people are familiar with lock drops, but think of them as airdrops with an opportunity cost. So the Aerodrome holders took on an opportunity cost. They said, I'm gonna vote for SYND that has 0 history. It's an empty pool, and there's 1% of the SYND supply sitting there. So if I vote for it, I get 1% of SYND, whatever that may turn out to be.
Which is an incredible amount, by the way, Will, for a lock drop. That is generous.
But still much less than what you would give in the traditional route.
Airdrop is maybe 6, 7 or something.
I've heard more. It varies. But then they are taking an opportunity cost. So they're choosing not to get guaranteed rewards from other pools. They're instead taking some opportunity cost based on their belief in us. And then, so we gave it 1% there, and then that went to an incredibly aligned community. We have staking dynamics where you essentially predict which rollups will do well. Aerodrome has staking mechanics where you predict which pools will do well. It's very similar. It's a very aligned community that we want. And then we carved out 2% to projects, and we airdropped it to projects, not to end users. The reason why is because we wanted projects to choose what communities within their holders mattered most to them. So Banker, for example, is giving their airdrop to the top 500 Banker Club members because that's what really matters to them. Clicker which is also like a great discovery platform. They are asking their community what they should do with it. And we have a bunch of groups reaching out to us, or we're reaching out to them, and we're like, hey, you have this really cool thing you can do, and you can choose the things that matter most to you. So that also gets us alignment. We airdrop to 100 plus aligned projects, and then they choose the most aligned subset of their users. And then there's, we're a pragmatic team. There's still a time and a place for centralized exchanges and market makers, but they did not have to be the center of the universe in this launch. This wasn't some massive fight to get as many tier ones as possible so that we could get, the best results. This was, hey, look, we're doing something cool. We're doing something different. You should understand that. And if you're up for that, great. And if you're not up for that, that's okay too. It totally changed our conversations, which helped quite a bit as well.
Yeah, but I do just want to emphasize, because you guys said, a lot of things could have gone wrong. This has only ever been done once, right? When the 𝘨 token itself launched, right? And let me tell you, in the syndicate DMs, in our DMs, major funds, major market makers, just whales, participants, a lot of anxiety, right? I think out there in the community, I think there were some people who said, this is awesome. I totally get it. I'm excited. And frankly, we even got some messages as this is the dumbest thing you guys have ever done, and you're going to get killed. And why would you ever do this, right? And so I do just want to commend Will, Ian, and the team on the conviction, because obviously we had the conviction to launch this way back when. And we've talked about it with so many other people. And some of them have even gotten pretty close to the launch line. And we're thinking that they were going to go in a more fair, community-led launch like this. And then at the last minute, the market makers, the VCs, the whales in their ears, peel them off. They give their tokens over to Binance. They get, they do the typical games. But I cannot tell you the number of times that these projects have come back to us. They have a great first 48 hours, a great first week, and then it all catches up with them, right? And
wow.
And I Will and Ian and the team, took a leap of faith here, because I think they really believe this is the right way from the first principles, and they believe that all of these other options have significant costs to them. And I want to commend them for having that leap of faith, because now they will be an inspiration, I think, for many other projects and protocols to launch in a similar way. I can't tell you how much inbound interest we've gotten now from projects and protocols, because a lot of people are sick of being extracted at what is usually should be the most exciting moment for your project, right? When the token is going live. And now they have a better option.
And Alex, I was just saying to Rob, yesterday or the day before, we've been now in kind of a more optimistic bull phase, feeling like a bull market for, maybe it's been a couple of months where it truly feels like, wow, things are exciting. It's been kind of hit or miss for the last 2 years with different periods. But the one period that we did have in early 24 was the high FTV, low float meta that people really got upset about. And that kind of phased out into 24, into early 25. But all it took was a little bit of Trump, going out and saying, crime is legal, and a little bit of bull market spirits. And I just watched in the last month, 4 to 5 projects launch with less than 20% float at over 1 to 2 bill on all the centralized exchanges and do the whole dance, and nobody said anything to them. So we've done a little bit of a full circle here.
Yeah. And I think the best part about this is that it really is an everybody win kind of scenario, right? The project gets a great launch. They get to distribute their token to an aligned group of participants. That aligned group of participants are the first ones in making the markets, bootstrapping the pool, all this sort of stuff. And you also still get that exchange listing distribution day one. And by the way, there is one more element of this, which is, sure, there are crime is legal projects. They're going to go out there and max extract, of course. Always has been. But there is, I think, an increasing number of groups, right, as we are getting on these legal and regulatory rails. And I know this was top of mind for Syndicate, that they wanted to do it in one of the most compliant ways possible. They are a pioneer on the DUNA structure. They are betting on America. And so it's very important for them to have a launch that was not only successful in all the typical ways crypto and DeFi people will evaluate that, but that regulators and the general legal world will look at as a very compliant launch, which, in my opinion, this is probably one of the most compliant ways to launch. And so mirror those two things together, and it is the best of both worlds, and it's kind of better for everybody.
Yeah. Alex, just one last thing for you, and then we'll have a very similar question, which is, how does this new token launch model for Aerodrome impact the core business model? One of the most profitable protocols, top 12, I believe, if you checked DeFi Llama, different sources. We're clearly deeply in this return to fundamentals. I am the creator of the revenue meta, Robbie and I. There's the silly tweet, but that is very clearly where we're at. How does this new business vertical potentially impact Aerodrome's revenue and the Aero token? And then kind of, Will, curious from your perspective about some of the tokenomics looking forward for Syndicate.
Yeah, I mean, if you want a sense for how it impacts Aerodrome's revenue, VE Aero voters, right, who voted for this pool, right? And as Will said, there's an opportunity cost to that, right? Who took on the risk of doing this. The incentives that they got were something like 15 to 20x their typical, right? And it propelled Aerodrome into being the single most profitable or highest revenue producing protocol in all of crypto and all of DeFi, right, over the past 7 days. And if you think about that, there's clearly a business model out there, because projects are every day launching and giving away 15, 20% of their supplies to centralized exchanges and market makers. And if we say we've got a better model, right, and this is the type of outcome it creates for participants and for them, I think it is a whole new utility for the VE Aero token. I think it's a whole new way to incentivize participation on the platform and ensure that those contributing the most to the platform are being rewarded. And this is just one. And I think there's a much bigger pie for Aerodrome to capture. And again, this is not something you can replicate with a Uniswap. This is not something you can replicate with any other model. This is core to the MetaDex, only can be done on the MetaDex. And especially with the Base DEX integration, can only be done on Base right now.
Yeah, and I mean, from our perspective, what results is huge. So Syndicate is a network of rollups and app chains. They use Syndicate to sequence their transactions, and they use Syndicate to get all of these superpowers that make their rollup decentralized, community-owned, fees can be governed by the community. And our staking mechanics, we have a built-in community that already understands it, because they have been so deep in the weeds of Aerodrome game theory. The Discord in Aerodrome, the Aerodrome Discord is one of my favorite Discords. It's wild. Like, go there. If you're not there, you're missing out. Seriously. Also go to our Discord too. Yeah. The Aerodrome Discord, they like go through all the game theory. Like, people are like, oh, should I vote for Synd? Every other pool has more rewards. Should I vote for that pool and use that to acquire Synd? Like, all of these wild mechanics. And now that's our community of holders too. So we want people to be analyzing the rollups on the platform that we'll have more information on in the coming weeks. We want people to be able to go really deep into the mechanics of which rollups will succeed. And we get to bootstrap it with one of the most thoughtful, like game theoretically oriented, mechanism design oriented communities in crypto. So it's very meaningfully changed our network for the better, because it's ensured that the holder base is one who really understands us deeply in our mechanics, which are lovingly cribbed from Aerodrome in a number of ways. And now they understand us too.
And Will, just one last thing for you. What is the state of, so I saw the Syndicate chain was using EigenDA, had special customized kind of execution set up, as well as just a different way of processing data, all just optimized around basically high throughput speed, just kind of what we would call it the rollup, this next gen purpose built type of chain. Just quick kind of TLDR on the Syndicate chain, if you will, just have a couple minutes, and then on just the state of the actual network, who's building or who's looking to build, with you guys.
Absolutely. Yeah. So Syndicate Chain mainnet is live. We have apps going live that we built because we care about using our own tech. If we like it, we know developers will like it. If we hate it, we know developers will hate it. So we work really hard to create a great experience for them. And then customers will be going live who will be announced soon. They're a great group of people. I don't want to say more, but yeah, keep an eye out for the next few weeks. From there, essentially what Syndicate Chain offers, it is, as you say, an Arbitrum Orbit rollup built with eigenDA that essentially supercharges these rollups with customizability, decentralization, and throughput. So you can customize any environment you'd like for your chain. So we're talking with potential perp dexes that could hit massive, massive scale because they can inherit all the properties of a rollup while customizing how they themselves operate and going beyond the scale of the EVM. We're talking with groups that want to customize the logic for their game to maybe inject off-chain data or inject random data or add all of these details that are enforced by the sequencer. We're talking with groups that are thinking thoughtfully about fees, and they want the fees to be in the hands of users. And overall, our goal with Syndicate Chain is to really bring forward this vision of rollup decentralization without compromising rollup scalability. Right now, you have two choices. You can choose a very scalable, very centralized rollup, or a not so scalable, decentralized chain like Ethereum mainnet. We want to give you the best of both worlds, and that's what Syndicate Chain is built to do.
Incredible. Guys, thanks so much for coming on. This, all materialized. You guys have been working on it behind the scenes, and it all came together over the last week. I really do hope that this inspires a new form of token launch. Airdrome has a competitive advantage because of the partnership with Coinbase. You get the immediate listing, but ultimately this is a way out of the high FDV, low float that we saw persist over half of this and last year. So congrats, guys, on a great launch. We hope to see you again sometime and talking about the next one to do these lock drop in the industry, guys. Congrats.
Thanks so much.
Yeah, Alex, if there's more coming, you got to keep us in the loop, man.
We'll keep you in the loop.
The community is hungry for these now, guys. Thank you so much.
Thanks, guys. We'll see you next time.
Thanks, Will. Awesome. Wow. What a just wow. I mean, just what
innovative. That's the crypto ideology in practice. That's what we want to see. We want to see experimentation. We want to see innovation. These guys were able to bring the best of both worlds and really bring it to the entire community. They chose to do something that didn't just benefit themselves and a select group of people. They chose to spread the wealth. That's decentralized.
Yeah, I mean, we should have disclosed prior, but we were also a recipient of the Syndicate airdrop just from helping them, being contributors and that type of thing. So we're stoked to see them go live. And it's just great. I saw them send to other medias, other DAOs across the Ethereum ecosystem, other types of community organizations. So it was fantastic to be a part of that at the Rollup and just, learn from what these guys are trying to do. And luckily for us, we've got another really cool app product to talk about next. We've got 𝘗𝗦𝗧𝗏, they've been building a special app behind the scenes at 𝘬𝘪𝘴. It's using the British spelling, so I'd pronounce it as rumor instead of the American way, rumor. We're gonna get them up and we're gonna talk all things what they've been building at 𝘬𝘪𝘴. So 𝘗𝗪𝗏, good to see you, man.
Good to see you there. Thank you for bringing me. Oh, by the way, on this British thing, it's not because I live in London. It's just because the domain was taken. So,
classic.
So you Americans have taken all the domains, man.
We're just hoarders over here.
So we had to pick something, and we felt, okay, fine. We won't like the name, so why not pick a British one to
there you go.
Satisfy.
It's worldwide, is what it is.
And it's .app, which is something that we're just going to continue to see as Web3 builds into its app layer.
Yeah. So 𝘗𝗪𝗏, let's set the stage a bit, man. We're in this world of social media, right? We're in this world where, Robbie and I had Frank Chaparro on formerly at the Block, now at GSR, talking a lot about this evolution of personal brands, of media, of distrust in institutions, the shift towards, influencers, smaller media brands like the Rollup, like others, and just kind of like this general trend at large. And then you kind of extrapolate that and bring it directly into the cryptoverse. And what we've seen is the rise of InfoFi. We've seen this idea of mind share around attention, this idea of monetizing attention, and basically this a more focused approach on information, on information ahead of others. That has always been the edge. That has always the alpha in all markets and really in life, but truly that in crypto has become more and more of a focus. And so we've got now this crypto Twitter is like the square, the Times Square, the town square. A lot of stuff happens. Zingers get thrown by, rumors are posted, takes are had, and then on shows like this, right? And so that's kind of the context of the era that we are living in. And then you kind of can throw in AI agents are in there. They're coming in, no idea what their intentions are, who's trained them, what their models are, what garbage they're spewing, or if they're on top. You see AI XBT sometimes has great takes, great rumors that come out to be true, has information, and sometimes is talking out of his butt. And so this is kind of like the context for where we're at. Maybe you can paint the picture for us as to what this idea behind building a new app around rumors is, kind of what the original thought process was, and kind of the story behind it now that we kind of have the stage here.
Yeah, of course. Thanks for this. So let me give you some context behind this. So I watched a podcast or some sort of a clip of a podcast from someone from ACNC, and they were talking about this idea of beef of the day. So if you look at crypto Twitter, and of course, even beyond, there's always some drama happening on a daily basis, like someone getting fired or someone getting rug pulling someone else and so on. So there's always something interesting happening in the space. And the idea is like you want to have a platform where those things can be discussed. So basically, instead of having the headlines of the day or whatever, you have the beef of the day where someone is fighting, someone is trying to defend themselves and so on. The other angle, so this was kind of the origin of this idea, which is like, okay, if people talk about beef of the day, like how do you present that in a crypto context? And again, crypto has no shortage of drama, right? And there's always this old wisdom that comes out and say, hey, when there's drama, there's always something that you can do about it, right? So for example, one is people often say, hey, buy the rumor and sell the news, right? And everyone says it, right? Oh, why are you buying now? It's too late, right? It's already priced in, But the problem is like when people say about this, say these things like, hey, you should buy the rumor. By the time you actually see the rumor on Twitter, it's already too late, right? Because there are all sorts of parties out there, people like Andy and Robbie who are traveling around in conference and so on. They hear all sorts of things, right? Of course, they cannot go out talk about publicly for ethical reasons and whatnot. But of course, there are all sorts of information that are floating around in the wild. And by the time someone picks it up and is bold enough or anonymous enough to actually go out and talk about it, says publicly, it's too late because people have already taken positions on that. So the problem is like, yes, people talk about this rumor, buy the rumor, but how do I find this rumor? Like, how do I get this? And this is where, again, this InfoFi ability for different people to actually come out and share that news, sometimes with their name behind it, but sometimes even anonymously, is actually very powerful. So the first point is like, okay, we want people to have this insight or information that is otherwise not available as a normal user. You have to wait until some influencer comes out and say, hey, here's this CoffeeZilla podcast or video that you can check, and then you take a position on whatever underlying asset is being discussed there. Or someone is brave enough to come out and say it publicly out loud. So that's for the first point. The second point is like, and by the way, you can see that time and again where, like, say, if you look at, for example, even in the classical TradFi world where you have this, rumor that, hey, earnings are going to be great. The earnings is going to come out in, 5 days time, and people take positions on that. And by the time earning comes out, or when the earning comes out, even if it's actually great, the price tanks. So there's always this behavior that people want to buy this rumor, buy this hype, buy this expectation. And when the actual news comes out, it's down only after that. And so that's one behavior that we've seen, which is like people actually want to buy the rumor. So the question is like, how do you get the rumor? How do you find that rumor easily? That's the first point. The second point is sometimes not just rumor, sometimes actually a fact. What I mean by this is like, let's say someone knew about, if you're in Dubai, Token 2049, you would have heard rumors about movement drama way before it was covered by media outlets on Twitter or CoinDesk and so on. And so there are all sorts of alpha which can help traders to take long or short position depending on whatever the news is. And that's, again, by the time it actually hits Twitter, it's too late, right? People have already taken positions and so on. And the idea was for us to build a platform where you can get this information in a much more streamlined manner. You don't have to scroll, 10,000 posts to get some content that you can trade against. So this was the platform. So our idea is like, we will take and basically scrape information from different sources, but also allow people, like, for example, there are people who come to your show and they share something. But unless someone goes and watches this in entirety, they won't get the idea that, okay, should I take a long or short or whatever. For example, the news around, you did quite a few podcasts with, for example, the IP founders and so on. There will also the relevant information that could be extracted from this. So for us, the idea is like, we go and find that content out there through AI tools, and we deliver to the end users, or if the end users go and find themselves and post it out. And then there's a monetization angle where if people come and use your information to trade, then you will get paid essentially through what you drive. So that's the high-level idea of what we're trying to achieve with Rumor.
I think this is a convergence of several metas, narratives, whatever you want to call them. Like there's multiple phenomena that are happening in parallel, and they're converging around this combination of info finance, entertainment finance, prediction markets, and ultimately it's a better form of truth seeking because it's hyper financialized. And that might be controversial, but because hyper financialization, you can see both ways, but ultimately we're applying capitalist principles to the idea of information and truth.
Exactly.
And doing this, I think, extracts things that were not there before. Prediction markets extracts outcomes and potential realities that were not there and assigns them, this probability of happening. The information that you're talking about extracts that into a market and then assesses a probability of, look, do you think this is believable? Do you think this is factual? How do you want to trade this market based on this information? There's also a couple other things that I just want to throw out there because I think we're just kind of seeing the rumblings of this entire new burgeoning industry. And I can really vividly picture the way these things will connect in the future. Those two, one of them is Yik-Yak. If you remember, this is an anonymous communication application that was popular when Andy and I were, in high school and college, still around today. It reached a peak of 10 million users. I was just playing golf with the founder, and these guys are now building on crypto rails, and they're letting you earn based on, it's still, you post an anonymous message. If it does well, you will earn some USDC. There's another app too that I think is going to potentially integrate with Rumor or Yik-Yak or both and just put together this really impressive ecosystem, which is 2cents.money. I like this because it essentially, again, it's anonymous, but it assigns your net worth. So you don't know who the person is, but there's some zk-TLS mechanism that will verify, oh, this person's worth $10 million, or this person, you might have this elaborate thing that you think is going to do well, but their net worth is $100. So how believable is it? And I think if you put some of these things together, you can remain anonymous, but be verifiable in certain ways. And you can start to build a more robust persona around this person without actually knowing who they are, their identity. And you can start to have a deeper insight into what their perspective is, where they're coming from, and whether or not you should take this thing as truth or a believable rumor in your case. And so just to say that I think you guys have really approached this from a unique angle. And I think pairing this with some of the other things that are burgeoning in info finance, we're going to see an entire new asset class created. It's no longer that we just have price discovery on stocks, equities, crypto is a new asset class. We're going to see an entire new asset class on rumors, predictions, information in general. And I think this is an asset class that is just being born now, and it's native to crypto rails.
Indeed. So if you think about right today on Twitter, you go to Twitter and you post some content, and if your content does well, and by the way, it's not just for Twitter, YouTube, elsewhere, you actually make money from that, from the engagement, because you're driving value back to Twitter, right? In the same way, let's say if I have some information, I have dug some information out of, Etherscan or something, that something is fishy going on. Why would I not monetize this? Right? And the way to monetize is, look, I'm here putting it, and if it's big and if it's true, if you believe that what I'm saying is true, then you're trading against or trading with my information, and you should bring me back some value back. right? And that's basically the idea of what we're trying to achieve, where you will share something, and if there's enough people believing in that thing and enough people use that information to trade, then you'd get paid, essentially through trading volume or some percentage of trading volume, for example.
There's
That's
another, go ahead. Go ahead.
No,
finish that thought.
so one thing that I also like to highlight is like there are two aspects to it. One is like, of course, sharing content. But again, the question is like how believable that is. And that comes to the fact that do people actually think there's enough material evidence in different shape and form that makes this rumor true or false? And then you bet against that or bet with that, right? So for example, if I say, hey, I don't know, CZ is going to launch another, I don't know, stable coin, whatever, right? If I have sufficient enough evidence to show that, then probably will actually believe that, okay, this is a legit thing. And then I would take that information, actually bet, I don't know, maybe BNB, go long BNB or whatever, right? So it also depends on the crowd that is going behind that specific rumor. That also brings the social element into it. It's not just about you tweeting out or you saying out, but they also have to be people behind it that believe that, or they have some faith that this rumor could be true or false.
Yeah, definitely. And I've tried the Rumor app, and on the app, what you guys have allowed basically is people to discuss within like a discussion room about that rumor. And so maybe that's how you can get real discussion about the legitimacy behind this. And then you can think about like reputation scores on the platform as well. And then you've got like people's reputation with, attached to their message. And you can build this kind of community around, just essentially making profit together, but ultimately like having the ability to sift through nonsense together and separate the noise from the signal, and then have a financial benefit on the platform from that, as you guys have integrated Hyperliquid for perps, or if you want to do something outside of the platform on a Polymarket, on a Kalshi, on a whatever it is, there's those types of options too.
Indeed. So one thing is also that it's also essential, it is useful for people outside of trader community. So imagine, let's say I'm a journalist, let's say Andy or Robbie, and I want to see, okay, what's interesting going on, what's worth covering. And then you would go to the rumor platform, you would see, let's say, 5 different rumors being floating around. Of course, they might be completely rumors, they might not be true, but that gives you some source of information of what interesting article you could write. So for example, let's say you see some interesting news, then you go and contact your sources and say, hey, is this really true? Is there enough evidence for me to go and cover an article or put an article around this? So it's not just about traders, but it also can be useful just as a general information for other community members who are involved in that ecosystem to grow as well.
Yeah, and it's kind of like an alpha meter. Like as you have a rumor that becomes more and more believable, it goes from this kind of amorphous thing that might or may not be true. And as it gets more and more true, it kind of cements itself as alpha.
Exactly. This is the whole thing. One of the investors said to us, it's like, we should rename it to Big If True kind of app.
I like that.
Essentially, yeah. So you are basically betting on the creator in some way and saying, okay, if this rumor is true, this creator will actually earn money, or will have some reputation behind it if it becomes true.
Yeah.
So, Rob, go ahead.
That was the other thing I was going to mention earlier, that this is another angle to the creator capital markets, where you guys and Pump Fund has done this, Zora has done this, and you are now doing this with Rumor, has brought down the barrier of entry for creators. Before, how and I don't remember how many subscribers or views we had to get before we got monetized on YouTube, but you have to reach a critical mass. Yeah. This is granular for each post. So you can, and then there's microtransactions. And so this is much more scalable, and it's a lot more bootstrappable, I guess you could say, because it's a lower barrier to entry. And then there's also peer-to-peer dynamics. We've seen Kick, Rumble, Twitch, all of these guys, they're taking massive cuts for themselves. And so that's why Pump Fund, that's why Zora, that's why you guys are in a position to win, because you're passing more of these rewards back to the creators.
Indeed. And by the way, we haven't done, so right now integration is mostly on Hyperliquid. So if you, let's say, for example, believe that, okay, this rumor is going to pump BNB or BDC, you go and take position Hyperliquid. But you could imagine variants of this where you say, okay, is this rumor true? And then you can create prediction market for that as well. So there are different opportunities for people to actually go and build interesting things just by using the data that's being provided on that platform as well.
Yeah. Aaron, I'm curious how you plan to kind of think about getting the first 100,000 first 100 or first 1,000 users to be active? What kind of incentives do you think are necessary for these new platforms? Let's just say there's Kalshi and Polymarket on the prediction market side, and then there's so many smaller variations of prediction markets that are coming out that are kind of like looking at the pie, trying to analyze where their gap is. Rumor is a bit different than a traditional prediction market, still looking at a similar, broad market in terms of the segment of people in terms of demographics. How do you kind of see your wedge? What is the wedge that you guys are gonna carve out for rumor, and how do you see the types of users end up playing out?
Yeah, so there's all sorts of information. So I'm not saying that the information that's there on rumor cannot be found elsewhere. You will actually if you go and search for Twitter, you probably will find it. The question is, how fast can you find it, right? Because that actually dictates how much P&L you will get if you take that action at the right time, because time is actually quite sensitive here. And so one thing that we want to make sure is that the data that you get is really, really fresh, so that you actually come here for data and then stick here for trading. That's the angle. So data is the hook. We bring you in because you find it's kind of like CoinMarketCap or CoinGecko. You go there to see data, and then for example, MetaMask, you go on MetaMask to manage your assets, and while you're there, you might also swap your assets. So the idea is, like, for us, the hook is the data. We want people to see the freshest thing possible, in the fastest way possible. So before, or even ideally, before it even hits crypto Twitter, it has to be on the platform. That's kind of the main angle. And once you have this, then you basically get hooked up because you want to see the data, what's coming up. And then once you are hooked up with the data because you're seeing interesting things coming up, then you'd go, oh, now this is interesting. Maybe given depending on what your interests are, maybe certain things will not be interesting to you. So you could say, oh, I don't have any position BNB. I don't want to take any position BNB. I only want to focus on Hyperliquid. But if something interesting comes out of the Hyperliquid, you want to go and bet on that, right? And so the idea is, like, we want to be the fastest possible a source of information that is not available on crypto Twitter quite yet. It will be available in like an hour or so, but we want to give you as quickly as possible those early rumors, these early whispers that you see and hear among certain circles and friends. We want to bring that up as quickly as possible. And
so what is the incentive for creators to bring their information to rumor before it lands on Twitter?
Yeah, so the angle is, like, if you, let's say you post a rumor around certain asset, and if people actually go and use that group to actually trade, then any volume that comes from that
goes back to the creator.
Go back to the creator.
Creator capital markets.
Exactly. So you are actually incentivized to post interesting things that will drive volume, trading volume through Hyperliquid.
Easy. I mean, it makes so much sense. And so ultimately, this is a game of, like, look, if you post your alpha on Twitter, people are going to use it.
You get nothing. You
get nothing, right? If people use it. If you post it on rumor, you're going to get trading volume if people use it.
And I believe there's points going on as well.
Yeah, so there are also some other things behind the scenes, but, like, the main angle is, like, we want you to generate revenue. And again, points also comes back to your and referrals and everything kind of comes back to volume as well, because we want to generate revenue, and that revenue goes back to people who are actually driving that revenue, which is creators essentially.
Yeah, this also feels like overheard. Big if true. Right? Overheard, right? Like, I can imagine I'm going to KBW.
Exactly.
Token will be at Refundamentals. Like, overheard at Refundamentals.
Yeah.
This alpha.
And you always hear this is true. Like, when I was a token, I at least heard 5 different things. And by that, I don't travel too much. But, like, whenever I travel, you always hear something, right?
Yeah, of course.
Of course, you cannot talk about it publicly because we are sensible human being, I suppose.
Yeah.
But many people are open to doing that, at least anonymously. So why not?
Yeah, so that's the case.
Yeah. And so, just switching gears to Refundamentals, I'm curious, what are you most excited about? What do you think you might overhear? Maybe we'll use this as kind of a breeding ground for some rumors.
I would say that there's still a lot of interesting things happening in the AI world, so that's still interesting. Of course, things have heated up recently with Binance versus Hyperliquid, I suppose, if that's the right way of spinning it. So we have to see how that plays out. And again, there are all sorts of rumors going around that as well. So hopefully we'll see some of those things come out in public. And then, so yeah, idea is, like, we want to push rumors. And of course, by the way, many of these rumors actually come out when you see people, right? Talk face to face. And this is where, you feel more confident to share publicly, in front of your friends. So I think hopefully we'll see this over coffee or drinks or, beer that people will see in Singapore.
And more generally, you guys have hosted a few of these Refundamentals events at some different conferences. What was the inspiration behind fundamentals. It's like, we talked about it before. It's like, crypto's re-entering its fundamental era because we're building for real people, real consumer behavior. We're not just building the 30th, L2 anymore, right?
Well, I don't
General
know.
purpose.
Justin Sun and CZ are indeed building the next _PERP just as we speak with buybacks.
I mean,
So-
_PERP have a fundamental value proposition adoption here in this
Yes.
space.
But even if you think about perp right? At least it was not like the perp were not there. DYDX was there, but still,
Right.
someone, Jeff, was brave enough to come back and say, I'm going to build a better perp DEX. And actually, it was indeed better. It was not just saying we're going to build it. It was actually much better. And so we have seen that there have been cycles where you see very interesting things happen, like DeFi summer, things like Aave, Uniswap, a lot of interesting things happen. And this is another cycle where you are seeing interesting things happen, like Morpho. You could say that, okay, the lending market is already done. There's nothing interesting that you could do. And then here comes Morpho. You could have said that Euler was dead, after some of the hacks that happened with them, and yet they have revived themselves. Same for example, Fluid, which is the kind of instant app. Again, you could say, if they were dead, nothing would happen to them, and yet there's a revival of some of things. And so you can actually see that there's still demand for projects and companies and ideas that people want to use, and not just sake of writing white papers and so on. So those days are definitely changing, and that's why we are talking about refundamentals and bringing back to building for the users, not for ourselves.
I also think YQ is just a fan of the return to fundamentals all caps tweet that I would put out once a month. And then we actually had the syndicate guys on earlier. And I remember in Denver, they put this tweet on the TV. Everyone was talking about different tweets that they, you just tweeted that a month ago. So, come talk about it. And they told me that this was the one. And so I went on stage and I think I basically explained what we're just talking about here, where it's like, we're kind of entering this practical era of the space, and it's really just returning to a lot of and I've been calling it unsexy stuff, unsexy use cases, payments, remittances, cross-border stuff, store of value, basic, DeFi usage, having a protection against the devaluation of the dollar, self-custody, decentralization, these things. All of that is coming back, and it's kind of boring and unsexy, but it's really, really important, and it's taken us way longer than I think a lot of us thought. And then on the other hand, all of the kind of maturation of the industry from a regulatory perspective is really allowing us to do so. And so, yeah, it's just really a return to fundamentals.
Yeah, the fact that today it's a fact that, by the way, this is something that people understand the TradFi space or Web2 space, where you say UI sells, right, or UX actually sells, in the sense that even if you just repackage something in a very user-friendly way, it actually sells. And think about Slack or Discord. You could always argue that there's no real difference between Slack and I don't know, Telegram or whatever. You could always do something, but actually the UI that in a certain context actually makes sense. So what you can do with Slack, you cannot do with Discord. So imagine running your internal team on Discord. It's going to be messy and painful, and it will suck. While if you use Slack for internal communication, it's actually great. And this is what you're seeing. You said unsexy, or I call it boring, where people are building things that are mostly packaging, but actually people want that. People want those kind of repackaged stuff because they feel like it's actually helping them in many ways. So for example, Hyperliquid Builder course, now people are building different kinds of interfaces for that, right? So there are people building, a mobile phone app that connects to Hyperliquid. You could say, okay, why would I fund this as a VC? It's just boring. Anyone can build this over a weekend. Why would I bother investing in it? And yet there is a demand for people going to those platforms and using that. So I would say there is a return to building things that people actually want and people actually would use, rather than, or here's another infra for the sake of raising $50 million.
Yep. And I mean, I had Paul from Pantera on Monday or Wednesday, I think, and it's getting to be too much, Amran. It's 5 days a week. I'm losing track of days here, man. And he's just mentioning how, look, they're focused on more Series A rounds. They're doing less very early seed infra stuff. Funding has gotten constricted a bit, even though the market's doing better and rates are coming down slowly. But there's just these forces at play, which is the regulatory improvement is causing people to for lack of a better term, man up and build something real. The VC kind of market is where it is for a reason, for a similar reason. The token market, we just had the Aerodrome guys on. Prior to this, they just did a whole new brand new token launch without a centralized exchange. You launch it directly on Base, on Aerodrome. It goes directly to Coinbase. So you don't even need a Coinbase listing. You don't need a Binance listing because from day one, you're on Coinbase already as a result of being on Base, yada, yada. So like there's just, people are pushing the agenda and forcing, and Hyperliquid is a big one, forcing others to, you know, either operate how they're going to, you know, operate or, you know, suffer. And so we'll see how this plays out. It'll be a really interesting couple years ahead. And yeah, I would love to have you on in after token, after all that. I'm sure you'll see Rob out there, and we'd like to do a demo of the app and see if we can get this thing rolling.
I will see you there, Emmett. Looking forward to it.
See you.
All righty.
All right.
We'll see you in Singapore. And thank you for joining us, Emmett.
Thank you, Andy. Thank you, Robbie.
Okay, sir.
See you next time.
Much love. Peace out. Rob, you get fired up on those prediction market-esque app type ideas, huh?
I think you know, we were talking about this with Farouk, like the asset class right now is it's you know, you asked what I thought was somewhat of a silly question, because it's like, how do you predict what a TAM is? It's like it's
Yeah.
I saw someone's tweet today. It was with reference to a VC. It was like, the TAM of a founder who wants to take over the world is not the initial niche. Actually, the TAM is the entire world. Like, that's prediction markets right now, because you could look at the current span of what prediction markets are covering and say, okay, well, it's the TAM of sports gambling, right? All sports gambling can be prediction markets, or it's some percentage of sports gambling plus crypto, because there's a lot of crypto volume that's happening there. But we don't think about the things that currently aren't financialized. They don't have price discovery. You cannot speculate on them. But with prediction markets, and only prediction markets, can you speculate on the set of things that are in this asset class that currently does not exist, but with prediction markets exists. And we have it is a net new asset class. And so with that being said, the TAM is really like, it's the existing market share of assets that currently exist, plus the asset class of things that are going to exist with this technology. And I think our imagination can only go, I mean, you can really just like think about all of the potential assets. It's really infinite, and it really spans like a really big asset valuation, like market size.
So the tweet is, one of the best VCs I know said this to me recently: I don't care how much about market size, or I don't care much about market size. If the founder wants to conquer the world, the true size of the market is that of the entire world, not the initial niche they try to go after. And Chao Wang says, I think about this often and I'm in complete agreement. Kevin Simback of Delphi responded, said, I generally agree. I'd like to see a founder who wants to conquer a niche or an overlooked market segment, which by definition is relatively small. And if they're successful, it makes it expanding into larger markets much easier. So
that's the tweet. And so I also agree with that, because you could speculate on what you think new assets are going to be. You can think about like what founders are what niche they're yet to find, and speculate on that. And I think prediction markets are something of a good founder, where it's like the imagination, it's a shelling point for imagination. Like you can create a market around anything. And so just like a good founder has a lot of imagination, they can go out, they can find a niche, they can adapt, pivot, and ultimately find a market that, you know, will get them product market fit and a successful business. Prediction markets are the same, man. They're a shelling point for imagination.
Yeah. Interesting.
Can't really put a price on that.
Interesting. Should we have a quick look at some of the markets that are live today on 𝘗𝘁? Let's see what's going on here. So cool. So we got, the top one that I see is government shutdown on October 1st, 2025. 54% chance. Wow. 137,000 traded on that. Will Trump expand the H-1B program? 14%. Da, da, da. When will a new episode of Jimmy Kimmel Live be released? 'Cause he got suspended for a bad joke. Is that right?
I think it was a Charlie Kirk comment.
Oh, got it. I didn't see that. I am so far removed from American pop culture on a day-to-day basis. It is just my day-to-day is like, all right, we're running the roll-up like 12 hours a day, and then it's like a workout, and then it's like anything that has to do with human connection. There's just not much time in there for scrolling around on like what's going on in pop culture. But maybe I'm missing out on some stuff.
No, it sounds bullish. Keep doing what you're doing.
So New York mayor election, which is kind of impactful for a lot of crypto. It's looking like they are going to elect Mamdani based on Kalshi's information, 86% Mamdani.
That's insane.
That is crazy, right?
What's your take on Mamdani?
I would not have voted for him, I don't think. And I would not live in New York City either way to take the taxes. Florida's by far the best to live, but New York is amazing for several months. So that's going to be my setup. I don't think it's going to affect me, really. I don't think it's going to affect that many people.
No, I just mean like the emergence of socialism.
Oh, I just think it's classic. Like Trump is going to just go full capitalistic mode. And my prediction is the next US president is more of a more of a socialist type of leaning person, because I think we're going to swing way too hard to one side as a result of this current presidency. So, guys, we have about half of the Ethereum Foundation's research team in the back, enough brains to conquer like 3 jurisdictional situations at once while, maybe having a couple beers. So we're going to roll into Tim, 𝘗𝘓𝘏, and Josh, all of the Ethereum Foundation. Ethereum's in a very pivotal moment in its existence. If you've been watching our show, you know that we've been covering Ethereum since about late 2019. Rob and I having first discovered around 2016. And since then, the entire trajectory of the asset, of the network, of the community has shifted, changed, grown, and improved. And so we've got some of the leaders in the back now, and we're going to bring them up to talk about Ethereum entering its institutional and practical era, what that means for the protocol, for the network, from a technical perspective, some of the updates from the EF, as well as just generally catching up with these guys. So, guys, welcome to the show, and thanks for being here.
Thanks for having me.
Hello.
Yeah, thanks.
Awesome. Guys, yeah. Ethereum is such an expansive and vast organization. Earlier, we were talking about prediction markets kind of as this Schelling point for imagination. I think Ethereum is also a Schelling point for intellectual capital as well as financial capital and several other things. A lot of that rolls up into you guys. I've seen you guys on All Core Dev and hosting AMAs and going to conferences, doing all these things. And so you guys have really been shepherds for the entire ecosystem. We were kind of talking about before you guys hopped on, like what is this episode going to mean for the roll up and for Ethereum? And we kind of came to like this like state of the nation, if you will, like the state of the network. Maybe you guys could just kind of give each of your pieces. You each have very unique roles within the organization. Catch us up. What have you guys been up to, and generally the state of the nation from each of your perspectives. Tim, maybe we can start with you, and 𝘗𝘓𝘏 and Josh will go down the line.
Sure. Well, yeah, first of all, thanks for having us on. I can start maybe from the perspective of like the L1 protocol, because that's what I spend my time on. I think we're entering like a pretty exciting time where we've figured out a lot of the path towards how to scale Ethereum, at least at like a high, architectural level. And there's like a really broad shared appetite towards just addressing every single bottleneck that's preventing us from scaling Ethereum, both on the layer 1 and layer 2 front. I won't get too much into the weeds, but I think we've just had all this R&D happening in, say, the past 5 years on things like ZK, things like sharding and, blobs for layer 2s that kind of felt impossible to ever ship in production, a few years ago, but just has seen this massive exponential progress where we're now at a point where after a couple of orders of magnitudes improvements on many different fronts, we can start kind of bringing these things to production. So yeah, it's a really exciting time where we're just kind of on this cusp of being able to scale Ethereum to a larger and larger user base, and doing so in a way that doesn't compromise on the core properties of the network. So the reason why this is hard is just you have to do it in a way that maintains all these properties around censorship resistance, decentralization that we value. And yeah, we're kind of on the edge of that. So at least for the protocol, that's I think where we're at. So.
Awesome. Josh, welcome to the show as well.
Yeah, thanks for having me. Big fan. I guess for context, so we have the 3 strategic initiatives at the ETH, as you and your listeners probably know. Scale L1, Scale Blob, Improve UX. I sit on the Improve UX side of things. Not sure where to start. I guess what I would say is that I think, like Tim mentioned, the path to scaling L1, scaling blobs is definitely becoming much more clear. There's a pretty legible path to significantly scaling L1 and to scaling blobs. I can't say that is exactly the same case for improving UX and solving interop, but it is becoming much more clear, which is making me more optimistic. I don't think I'd say the same thing maybe 6 months ago. So yes, like the picture is a bit fuzzier, but it's becoming significantly more clear, and I expect it to become even more clear in the coming months. And just a couple of weeks ago, 𝘠𝘬𝘬𝘬 and myself released an update on the Improve UX track. Encourage your listeners, anyone to go check it out. There's more information there on the roadmap to improving UX and to unifying Ethereum. It's clear that it's a top priority, both for us and for the ecosystem. Happy to share more about that. But yes, it's also an exciting and challenging time in terms of unifying Ethereum.
And 𝘠𝘬𝘬𝘬, welcome to it. Thank you for joining.
Thank you for having me. Yeah, I think like I sit between all the chairs here at the moment. Like I kind of like started thinking about like after being sort of like the like ivory tower researcher at the EF for a few years. I started thinking about a lot more practical stuff, and like since last year, like have been active on pushing everything towards like making sure that Ethereum is ready for the real world. I think like it's like a pretty big moment for crypto, right? Like all the eyes are on us because like for 10 years we had the excuse, oh, you won't let us do what we want to do, so we can't do it. Well, now we can do it. So like we actually have to show what it is, what we can do. And I think like it's a great moment. It's interesting because like things are definitely different, I think, from how many crypto natives have imagined them to be, but they're still very, very exciting, I think. And there's like a lot of things happening. And I think like, I mean, Ethereum does really need to like, make sure it stays in the game and like get things right now. I think like it's like things move much, much faster than they have moved for a long time. And like, it's kind of like how I think about like, like trying to make sure that we get things right and
awesome,
do the right things. Like scaling the L1 was one of the big things that we really needed to change, and like finally we've started doing it.
I agree. It just took Max Resnick leaving to Solana in anger with a hell of a
he has played his role as well. Absolutely.
Well, gentlemen, thank you for joining us
and I'm
today.
grateful to him. I mean, he's
yeah. I mean, he had the right idea. And it's unfortunate that, he took his talents to Solana, but at the end of the day, I think we can move firmly on as we are. And guys, we are entering Ethereum's institutional and practical era more than ever. And what I mean by that, from a holistic perspective, is crypto's entering this era where regulatory clarity with a mix of returning to fundamentals, investors wanting to invest into real, sustainable, long-term assets, institutional capital with longer time preferences, creating a new dynamic in the market. In light of this, we're moving deeper into what I consider like deep value territory, which I think may be a roaring kitty term, if I'm not mistaken. So we're moving away from some, Fugazi decentralization, doing DAOs or doing different types of structures for the sake of them. Now, there's anything wrong with DAOs. They're still amazing structures, but we had to do these things in the past. We had overemphasis on this idealism and tribalism instead of product, application, user experience, onboarding, and really into real, albeit sometimes unsexy categories of moving the entire world's finances on chain. It's extremely bullish development for the space as a whole, equally so for Ethereum, the #2 crypto asset, the #1 smart contract platform. I'm curious, guys, from each of you to kick off, in this new practical era, understanding this context, what is the vision for Ethereum in this era from a tech perspective? Let's kind of start to understand what we want Ethereum to be and kind of align on that, and then we can hammer in on how we get there. So 𝘗𝘓𝗏, I'll start with you, and then let's go down the line, guys. Let's have some fun today.
Yeah, well, many things. I think like one of the things we realized is like we need to refocus on Ethereum, the chain. It's come a little bit short in the last few years. It was all about L2s and everything, which are great. Like they were great Ethereum innovation, but like I think like Ethereum L1 still has a huge role to play in this world, and like it's one of the things that we should focus on. And then yeah, like we have the other two areas. I think like Josh will tell more about the UX part, but I think like on the scale L1 and blobs part, like we're at this great point in time where actually in a way like yeah, like I don't even want to call myself a researcher anymore, because like actually the research is kind of like figured out more or less. There's no deep academic research here to be done. It's like execution now, and like we just really need to do it. We need to get our heads down and like get the work done.
So Josh, picking up on that, when you're thinking about UX for the institutional era, more practical era, how has that shift occurred? Putting the research aside, now putting your execution hat on, you know, give us a before and after picture of you know, where we were and where we're getting to.
Yeah, I guess, and I would maybe just start by saying one thing, maybe to correct some FUD. Like, to me, at least, speaking from my own personal point of view, I don't think I've ever really been more optimistic on the future of L2s and their critical role in the Ethereum ecosystem. And I think oftentimes some of this renewed emphasis on scaling the L1 gets sort of misconstrued as, you know, moving away from the importance of L2s, and just want to, again, like, to me, genuinely, I don't see a future. I don't see us getting to where we want to be without L2s playing a huge role here. I do think like what that means, it may look a bit different from what it has meant historically, perhaps, to your question. I think, to me, the way that I view sort of the multi-chain world that we're now in, it hasn't been that long that we've been in this sort of true multi-chain world, but we're clearly there now and likely to continue to stay in. To me, I guess I view L1 having two sort of main value drivers, let's say. One is its role as the most secure, permissionless, neutral trust and security hub, sort of the trust root. And I think #2, I would say, is as a strong liquidity hub. And I think this is where some of these three strategic initiatives are, you know, coming from. It helps to reinforce this liquidity hub. And that doesn't mean that yes, like there's the world that we're going to. There's a world where L1 needs to maintain its role as a liquidity hub, and I think both of these things are actually going to the question of, this is maybe a bit of a tangent, but I'll stop here, in terms of like, why would someone who's building a chain want to become part of the Ethereum ecosystem? Why would they want to be an L2 versus an L1? To me, I think, and again, my personal take is that it's these two value drivers. It's both on the security, trustless, permissionless side, tapping into the most decentralized, secure validator set, and then also tapping into Ethereum as a liquidity hub. And I think clearly there's a lot of work to do in terms of strengthening the liquidity hub and strengthening the interop, which actually allows this liquidity hub to operate as a liquidity hub. So yeah, maybe I'll stop there.
Appreciate it. Yeah, Tim, from your perspective, what is this? What does the institutional era of Ethereum look like from a tech perspective? And what are some of those core components that are non-negotiables that we're working towards?
Yeah, one thing that's kind of funny with this is there's some ways in which the institutions are almost the
Mm.
It's so true, isn't it? It's funny how institutions have a really, really, really important focus on privacy, something that we talked to Justin Drake about earlier in the week, which is going to be a big part of the upcoming Ethereum L1 roadmap. And then, yeah, this credible neutrality at the base layer. And Tim, I think this kind of brings a good follow-up back to you with regards to Ethereum's role in the macro landscape. And so I think all of us can agree Ethereum's now become a macro asset. I mean, it's very clear. If you look at pure economics on the market cap side of things, it's up there with some of the biggest equities and other kind of hard assets in the world, and also is now playing a big role in DeFi and consumer across these L2s and the EVM in these upcoming payment chains that have been announced, which is a whole topic to get into as well. But when you're thinking about from money perspective, from compute with AI and kind of this realm and coordination, how does the Ethereum Foundation view Ethereum and ETH, the asset, within the broader lens of the macro global landscape?
I can give you my view. I don't know that I would call this the Ethereum Foundation consensus.
Tim, Josh, anything to add there, guys? I think that was a good answer.
It's a good answer. I don't have anything to add to that.
𝘗𝘓, anything on your side about Ethereum's global macro position?
You as an asset or as like the chain? I think they are very different.
Yeah, I think Tim spoke a lot about the chain. I think either or.
Right. I mean, I think like the asset is the much harder one, so I don't really want to talk about it at the moment. But I think like the chain is, yeah. I mean, it's in a very interesting position because like it is like we're at this, like as you mentioned earlier, at this point where global adoption is probably like about to happen, and Ethereum has like a lot of sort of like activity, like trading, DeFi, everything from the crypto markets. And that doesn't automatically translate into like being successful in this next step. It's like a good starting point, but I think like we have to now successfully adapt that to like what the real world assets need and so on. Because like it's like kind of like it's a little bit like a crossing the chasm moment, right? Like where like you have all this early adoption in the crypto world, and now comes the rest of the world, and like this is gonna be very quick. Like this is gonna be very sudden. Like it's gonna be like nothing and then everything, and like it's kind of like I do think that the Ethereum chain has some unique advantages in terms of the trust it has, in terms of like the maturity of the EVM technology, but it also has some unique challenges in terms of like our past refusal to scale it, which will make things a bit harder, and like being slower on like slot times and finality than other chains. Like those will be seen as disadvantaged by some, and I think we'll have to like make a very credible roadmap how we're going to improve on all of these to get to like acceptable times for global markets.
Yeah, thank you for that, 𝘗𝘓. There's a really important balance to strike here. So I'd like to pass this over to Josh because we've kind of heard from Tim, describes this economic zone of really flexible, and it's something of real agility. You can be nimble and kind of test these things out almost experimentally. Prediction markets reaching the scale is not possible anywhere else, for example. And then 𝘗𝘓, the flip side of that is that some of these are really, really important and crucial economic pieces to a global macro landscape. The crossover here is 30-year mortgages, making sure that institutional capital is resilient for the long haul. So Josh, kind of difficult position to put you in. Like, how do you balance these two worlds, one of like really experimental financial imagination and the other of the tried and true practical fundamental economics and finance that has lasted 100 years and will last 100 more? How do you build a UX on Ethereum for both of these worlds?
Yeah, that is a tough one. I don't know that I'll have the best answer, but what I would say is that ultimately we need to lean into Ethereum's strength. We need to lean into L1 as the global source of truth, and we need to fix the things that are currently bottlenecking that, preventing that from happening. And one of these, of course, is L1 finality time. There's a really powerful set of mechanisms that we can improve in, I think, the not too distant future to make big strides on finality time of the L1, at least in many different sort of user flows. And we can talk more about sort of like what are the actual things we can do there. I don't know how deep we want to get into right now. But that's one thing I'm really excited about, is just this general sort of set of things that we can do to make the L1 faster. On the L2 side, there's been a lot of momentum here as well in terms of getting rid of the 7-day windows. And that's something that I think actually we need to do no matter what. And so I think to me, it's maybe less about like it's not going to be the most insightful answer perhaps, but finding the things that we know with high degree of confidence we must do no matter what. It's kind of like there's a lot of low-hanging fruit. So there's a lot of things that we know we need to do. And these are things that are not a surprise. Many people in the community have been talking about this for quite a while. But I think now we're finally sort of understanding the design space and the infrastructure, and ZK is here and all these kinds of things that are making this much easier to do now. And just for whatever reason, we're sort of like finally getting to this rallying point now. So I think, yeah, speeding up L2 withdrawal time, speeding up L1 slot time, finality time, strengthening things like intents, making sure that intents-based bridging is not just sort of more available, but is more secure and more trustless. There's a lot that I guess I could say about all of these things, but I think it all goes back to like, how do you make Ethereum feel like a cohesive platform again, instead of, yeah, a bunch of silos.
Yeah, and I think, Josh, on that point, when it comes to L2 specifically, 𝘗𝘓𝗦 mentioned the focus being very, very strong on L2s previously, last couple of years. Kind of tides are shifting towards the L1, but I think from a technology and a vision perspective, the end game still remains in scaling via L2s. How do you kind of balance the focus back to the L1 within the foundation with your perspective of, okay, let's build a cohesive, not fragmented L2 environment and kind of continue on this roadmap because we think it's what's going to be the best for Ethereum.
Right. I guess I don't know that I would necessarily frame it as L2s are the mechanism for scaling Ethereum. I think depends on how you frame. There's many mechanisms and there's many different types of ways that we need to scale, and we need to provide sort of unique capability, enhance the capability of what Ethereum can do. L2s are one path and a critical, valuable path to enhancing the capabilities of Ethereum. But there's a lot we need to do on both sides. And I think it's one of those things, on the one hand, sort of like the conventional wisdom is that you have to focus. If you try to do too many things, then you're going to do none of the things well, which, yeah, I think there's truth in that. I think in this case, for better or for worse, we're trying to do something incredibly ambitious. We have to do ambitious things. We have to do both things. We have to scale the L1, increase its role both as, like I mentioned earlier, as the trust security hub and as a liquidity hub. And then we also have to strengthen, empower L2s to provide not just sort of mini Ethereums, but to offer unique differentiated services on top, which the good news from my perspective, at least, is most, if not all of the L2s are already doing this, offering actually really compelling differentiated services on top. In some ways, it's still day one, but I think there's a lot of, I'm more and more excited by what's happening on the L2 side. So I'm not sure if I'm answering your question, but this is like, and then interop kind of goes into both of these. Yeah.
Yep. Tim, you have anything to add there?
Yeah, maybe one quick thing to add is that the way we build Ethereum, I think, does allow us to do these things in parallel. We have this separation between consensus layer team, execution teams, and L2 teams, and you already start to see this.
Awesome. And you mentioned this modular organizational pattern. You have the consensus team, you have multiple teams, and all of these teams are able to divide and conquer. This is the nature of specialization as teams grow bigger. I'm curious, right, that provides a lot of benefit on one hand, but on the other hand, there is a coordination effort that is required across all of these teams to make sure no one's stepping on each other's toes, you're not doing double work, and you have things that do cohesively integrate with one another. And so, 𝘗𝘓𝗦, to you, I'm curious, do you see this coordination as an issue? Does it pose a risk to the development of Ethereum? Or do you see, is there any other risks that are a little bit more pressing in your mind to the future that we described at the onset of this conversation?
Oh, I mean, there are many risks. I think coordination, yes. Like, so there is an extra challenge in Ethereum, like having this multi-client architecture with additionally the client teams being external. So like there's no direct command authority or anything like that. So essentially, like there are all these developers out there who try to together come to a consensus on what to build next. And we're trying to like really like direct this and give them like the best inputs and try to like give them direction. But it's definitely like, yeah, there are many different opinions. And like, even if like, yeah, I mean, obviously like everyone is working with the best intentions, like we all know that design by committee comes with certain problems and so on, right? So like this is kind of like really, I think it's one of the biggest risks for Ethereum for sure, because like we simply currently don't have the ability to like ship features with the same like kind of coherence and direction as like someone who builds this as a company. And like I think like we need to do our best to do it anyway. Like I think like we're working very hard on this, and we have seen like definitely a number of improvements. I think like we need to do a lot more. I think like right now it is getting to a point like where, yeah, we need to like push even stronger than we have so far to like get this faster and get into like the best direction.
And Josh, I think you wanted to chime in there on Tim's point as well, kind of along the similar train of thought with regards to the multiple pieces happening at once, and as kind of 𝘗𝘓𝗏 has described here.
Yeah, I guess I was just going to add that, yeah, I agree with Tim, and I think that we can do many things. We haven't always been as successful as we would like. I think our muscles are getting stronger there, both on the coordination side and just on pure execution side. And I think the answer is that there is no other like path forward. Like the path forward to this ambitious thing is to do both. And on the plus side, I think like the coordination is both a challenge and an opportunity. It's sort of like our unique strength and the challenge that we have to overcome. The good news again is that like it's not, yes, like the EF plays a role on coordination, on shepherding, on doing these things. But there are many other important players outside of the EF that also have a huge role to play here. And so I think that's one thing that allows us to do these things. We have, whether it's wallets, app layer, L2 teams, any of the ZK EVM teams, there's a lot of talented people in the Ethereum ecosystem that are going to play a big role.
Josh, I'd love to double click on that, because you brought up ZK a couple of times. We're big fans of ZK too. This is part of the research that the casino has funded, and now we've made a lot of discoveries. And so when we're thinking about the end game, and we're thinking about how L2s are going to coordinate with L1 to bring a lot of these teams and a lot of these use cases together, how is ZK going to help us accomplish this? And how does ZK change UX for the better, thinking out in kind of the near to medium term?
Yeah, I think there's a lot of maybe only sort of like like medium informed optimism around ZK, or maybe like hopeful thinking that ZK is going to come in and solve all of our problems. I'm partially in this camp of like I'm really like I'm the, maybe in this panel at least, sort of the least qualified person to give a super informed opinion on like, I don't come from a cryptography background, a ZK background. Justin, 𝘗𝘓𝗏, others will give you a much more informed opinion here, and maybe 𝘗𝘓𝗏 will give you the more sober opinion.
Yeah, maybe we'll get 𝘗𝘓𝗏 to come in after you.
But yes, I don't think I would add much apart from like the progress that we've seen has clearly surpassed what most thought would be possible a year ago. And that I think there's a lot of, even like the most sober sort of perspective would say that there's a lot of opportunity for this technology to help both on the scaling side and on the interop side.
Awesome. 𝘗𝘓𝗏, could you maybe fill in the gaps here? Give us, clear up some of the misconceptions that we all have around ZK.
Yeah, I mean, I think like, ZK is clearly really cool, right? Like it solves like a lot of the big Ethereum problems, which are like, we want to build a verifiable chain, like anyone in the world can quickly see that that it's correct without like having to have super big nodes. Now, like I think the qualifier here is, and that's why we have to be careful, because like there's some people think, oh, like it's going to solve everything, and it doesn't solve everything, right? Like for example, if you want to have like a fast chain, well, you still need to have nodes that are fast enough. Not everyone now needs to run these nodes, but like fundamentally the engineering challenge is still there. Like it doesn't go away with ZK. And like similarly, like I think like in a funny way, like right, ZK solves a problem for Ethereum that Solana doesn't even have, because like we want this verifiable chain, and they just like say, well, we just have like these big nodes, and that's fine. Like some people can verify it, maybe not everyone, fine, right? Like so, like yes, it's amazing that we have this and we can build this, but in terms of product, like it doesn't give us that much. It gives us extra security, it gives us extra values, but it doesn't make Ethereum faster than like other chains, or like that's what you have to consider. So it's an amazing technology that gives us this verifiability. That's how I would say it.
Got it. Okay.
Tim, I think you're back, by the way. You had a small push out, but I think you're all good here. Sorry about that. Rob, please.
Yeah, I mean, Tim, now that you're back, maybe we could get your perspective on this, because we've seen a lot of very valuable contributions come out of the cryptography world. And when you're thinking about instilling this into the protocol, or instilling this just into the community in general, we don't want to get ahead of ourselves, but it is a coordination thing that we're trying to solve here. So I guess just from your perspective at the higher level, kind of looking at the teams in general, how are you trying to solve this coordination problem?
I mean, I guess that's my day job. So I end up spending a lot of time talking to people and trying to figure out like what are the main bottlenecks or disagreements, and how to focus the community's attention on the right things at the right time. I think one of the biggest challenges with this coordination is for protocol researchers and core devs, they're paid full time to work on the protocol. So it's easy for me to ping like 𝘗𝘓𝗏 or to ping a client dev and be like, can you look at this thing? And their job is to do this. The thing that's harder is for the Ethereum community as a whole, right? Like the Uniswap team, the Optimism team, any team building on Ethereum, right? Their job is to build their product, to build what they're working on, and not to like work on their protocol full time. And I think this is like one of maybe the trickiest coordination challenges. Is like, okay, what is the right way to get all of their perspectives, to understand from our users what they want, and then to translate that in a way that researchers and core developers understand. Because as 𝘗𝘓𝗏 was saying, like we're not a company, right? If Ethereum was a company, then you could imagine there's some chief product officer, they go and or CEO goes, talks to a bunch of users, and then decides what we're going to build. And if you don't want to work on this, you're fired. We have to effectively convince everyone, and so I think this is like something that we just need to get better at. And we've seen like some improvements. One small thing we've done, for this coming hard fork is I came up with this idea of like headliners, where like the forks tend to have one, really important feature in it. And so historically we would go to people and we'd be like, here are like 20 proposals. Which ones do you think? Now we try to like streamline it. So it's like, okay, here are like the most important proposals. What should we actually do, right? Like of the like big potential items, which one should you focus on? And I think we've seen like some decent engagement there. But I think we have to go like far beyond that. Like I kind of think of this as like step 0. And we effectively need to recreate what like a product organization does, but in this decentralized context where we don't ultimately have just someone who can unilaterally make the call. Because at the end of the day too, even if the core devs and the researchers are convinced, the way Ethereum works is people still have to upgrade their nodes, right? Like the entire community, all the stakers still have to accept this. So it has to be more open, more participatory, but also be so in a way that doesn't end up being just captured by committee thinking and extremely slow. So that's a challenge.
Tim, this is maybe a question from left field, but we've had a lot of players that are kind of in the traditional financial space. Now they're entering this world, right? The world of Ethereum. They're building a lot of capital and potentially influencing the network. Have you seen any of these recent newcomers to the ecosystem try to kind of sway the direction of the Ethereum priorities using some of the ETH that they've built up in these treasuries, or do you anticipate that as a potential risk or something that you're going to have to navigate as you think about the cohesiveness across the organization?
We haven't seen it directly, and It's been helpful to understand what the concerns are. Like, for example, one practical one that comes up a lot, that's like a very TradFi concern, is the withdrawal and activation queue for staking, and whether you want to have staking ETFs or not. I think Vitalik was literally tweeting about this today. And so this is something like, I don't know, like every time you speak to these ETF providers, they will bring this up as a concern. So they haven't like tried to do some malicious takeover of the network to like force this. As to the extent I'm aware, they haven't even, the easiest thing they could do is just like pay researchers to focus on this problem and solve it for them. And I don't think they've even done this yet. But I think, like, look, this is like a healthy thing, because ultimately it all happens in public, right? Like, if they come and they're a stakeholder in the network and they feel that like faster exits from the validator set would be beneficial. There's reasons today why we have such a delay. We can analyze those reasons and be like, okay, is the trade-off we're making correct, right? Like, should we, rethink how the exit queue works to satisfy those needs? And again, obviously, without compromising Ethereum's core properties. Like, you could imagine some very bad versions of these designs that let these ETFs enter and exit at will, but then we kind of compromise the security of proof of stake, and then the chain kind of becomes far less valuable because it loses its security. So yeah, I don't think we've seen anything like malicious or bad so far, and I think it is actually extremely good for those preferences to be like voiced. It's for people to understand them and to think through the trade-off space of like, okay, how can we design the protocol in a way that's useful for them and also sustainable?
Yeah. And I think this builds on Ethereum's neutrality in general. It's sort of like, okay, how do you maintain neutrality, but also take a consensus of opinions and incorporate them into the protocol? And so to your point, you're taking a very research-driven approach, right? Like, what these guys could do is they could pay some researchers, and we always want to make sure that we have objective research. But if we focus, on one particular area of research, that's the place where we could see progress. And so Ethereum has its objectives. You're focusing, on these three pillars: scale L1, scale blobs, improve UX. And there's other sort of auxiliary areas of research that could matter more or less to some of these organizations.
Yeah, and I think also it's worth noting on these three pillars, like, they didn't come out of thin air, right? They come out of talking with the community and understanding what people want. And Tomáš, who leads the foundation now, effectively, that was the first thing he did when he took the job. He spent like a month or two talking to everyone at the EF, everyone in the ecosystem, people outside of crypto, people who hate Ethereum, and to try and distill like, okay, what do people want out of Ethereum? Because ultimately, again, as I said, it's like the community has to adopt it, right? Like, if the community doesn't want to scale at all, they just won't run the software. Or if we came up with these crazy like roadmap items that everyone hated, they just wouldn't ship. And we've seen this in the history of Ethereum, right? Like, when there are things, even if though they're like well developed and whatnot, that the community just doesn't want, we haven't shipped those on chain. So I think, like, yeah, we have these priorities now, but it's worth highlighting, like, they are the result of like at least trying to sample the community and what they want, and we can keep getting better at that process.
Yeah,
Right.
I think that kind of brings us to a good question here and a good kind of thought around what the priorities are in this era. And Dankrad, I think I want to bring this to you from the protocol perspective, right? We're thinking about Ethereum's maturation, right? And we've just talked about the coordination amongst the different teams as well as the priorities in the lens of this kind of institutional context and in this kind of maturation phase. What are the core priorities, right? Obviously, we have the three pillars, but what would you say are the non-negotiables going forward into this era? And I asked Justin this, and I'm super curious to see how his answer aligns with yours. What does Ethereum need to focus on in the immediate term to basically get us to where we need to be? What matters most?
Has to be clear, right? Like, one or so, it doesn't mean we're like saying, oh yeah, like, let's give up on everything else. We're just becoming like whatever other fast chain now, right? Like, Ethereum does it differently in the way that like we don't compromise on the values. I mean, okay, there will always have to be compromises to be made, but they are a very different nature, right? For example, we are not giving up on verifiability. Like anyone in the world should easily be able to verify the chain. But what a compromise that we probably are willing to take is like, okay, there might be some nodes required that compute these proofs, and they are a bit bigger. I think that's fine because it's a very different nature. You only need one of these. Like you're not like don't need thousands of these, right? Like yeah, I mean on censorship resistance, right? Like we are like exploring new ways to get this, right? In the past, it was like, okay, like we are censorship resistance because everyone can run a node with a validator at home. Well, I mean, maybe this doesn't have to be the way forever, right? Like there are worlds in which like we manage to like have much smaller nodes, like even give the inclusion guarantees, but without being Ethereum validators. And it might be a better trade-off because right now this economic mix of like providing the security and providing the censorship resistance is like kind of a little bit, it feels under tension, right? Because like you have institutional staking versus home stakers and stuff like that. So I think like we're willing to like make these compromises, and I think that, but on the other hand, like we are really keeping these core properties, verifiability, censorship resistance, everything's open source and so on, right? And extremely high security, like the quality of like the EVM and generally like Ethereum node software is very high. So like these we will not change, like we will do everything to keep this, but we need now really to focus on Ethereum as a product at the same time. And I think that's like the part that was a little bit like not as much of focus in the past. We thought, oh, these properties, they are our product. Well, they're not the product, right? Like they're properties of your product that you need to keep. They make it more valuable, but we need to make sure that like what you do on the chain, that is really good, like that you can actually generate the value by like doing that. And I think like on a lot of these domains, like Ethereum has a lot to offer, and like we now need to add all the things that it doesn't offer at the highest level yet.
I'd be remiss to not ask this as a follow-up to that, which is you have kind of laid out kind of where you see the most important priorities laying, and you did not mention anything about blobs or dank sharding. It's your first time on the show. I must ask about dank sharding. What is the status of dank sharding, and why is that important to Ethereum?
Right. I mean, dank sharding is a big meme, right? Like, I mean, it's funny because I was just the guy who like put it all together in the end. Something that I guess had been worked on before, and I have made many important contributions, but it was several people on this. And like the main thing, like, I mean, so like many people associated with data sharding, so the idea that you only put like scale the data availability layer and leave it to rollups to actually use it for execution. This actually was already done in the past, right? That pivot had been done several years ago. This kind of like the news with dank sharding was more of like all putting into like a simple roadmap that we could actually execute, and like that we're now on, and that we are like now several years in, like we have shipped the first big milestone, actually the first two kind of like we shipped like 4844, we shipped blocks and blobs, and now we have scaled them a little bit, and now very soon we'll ship the next milestone, which introduces data availability sampling and introduces a scalable data availability layer and allows us to ship a lot more blobs over the next year or so.
Appreciate that. Guys, so more open-ended here to close us off. We got 5-10 minutes left, or maybe closer to 5. When you're thinking about Ethereum's neutrality as being something that we've talked about several times on the show so far with regards to this practical era, and even I started off, framing this as ideologies and tribalism is kind of being a bit more put into the background in favor of real product market fit, real usage of products, applications, businesses on chain over kind of, which DA layer you choose or what chain you're building on or how you're thinking about, what kind of sequencer architecture that you're going to use. All these things are important and they need to be, well thought through. But the entire space, I think, is entering this kind of practical frame of thought. Now, with regards to Ethereum, what's kind of ironic is that a lot of these other ecosystems are being and have become much more politicized and become much more of a hierarchical kind of setup where they operate more as a company than like Ethereum does in this neutrality. So I'm curious, as you guys have gone through the shift with 𝗤𝘳𝘓 being the new director of the EF, and just generally the reformation of the order, do you guys truly think that Ethereum's neutrality will survive long term as other ecosystems push on a competitive basis with a more politicized kind of setup? And if so, kind of how do you guys see the future of Ethereum's neutrality, which I think we can agree is the most important, or one of the most important aspects of the protocol itself? Why don't we start with you, Josh, and go down the line? And guys, let's end us off here.
Yeah, it's a good question. I think what makes me optimistic that we can preserve it is that the value and importance of neutrality, of security, of the permissionless nature of the network, I think will only grow in terms of how clear that the clarity and importance of it is only growing. You're seeing other chains mention the importance of permissionless. I think this is something that as the number of chains scale and grow, it'll become more and more clear that this is not just a nice to have, but a sort of non-negotiable, and that Ethereum is uniquely positioned, at least today, to maintain its role as this permissionless hub. Those are the things that make me optimistic. And I think, yes, both like 𝗤𝘳𝘓, 𝘱𝑜𝘠𝑗, many others at the EF have done a terrific job at sort of making sure that we continue to not just preserve those, but to strengthen those properties of the chain.
Awesome. Tim?
Yeah, I guess my view there would be that neutrality is something that compounds in a way. Like you kind of need it at the start, and it's very hard to add after, because if you start with something neutral, you get into this frame of mind of like you have to compromise and get the consensus to improve the chain, and this is what Ethereum has done. And over time, there's just more and more people with different opinions, different viewpoints and whatnot that need to agree ultimately to improve this thing. And that process kind of biases towards neutrality, because if we push an upgrade that like the EF wants and the entire world hates, then it won't happen. And if, whatever, TradFi tries to push something that the community hates, it won't happen either. So I think Ethereum just effectively is, I don't know, it's almost like this path-dependent thing where we started with this maybe higher cost, and we still pay higher coordination costs to maintain this neutrality. But as more people come, as there's more stakeholders involved, you almost get it by default to the extent that you're able to keep those people in. So yeah, I'm pretty excited about that. Like, I think it's more a question of like, okay, how do we channel this energy rather than can we fundamentally lose this? Because I think we're at a spot where we've built the checks and balances, and now we just need to like execute.
Awesome. 𝘗𝘓𝗦𝗏, anything to add on neutrality?
Yeah, I mean, I think I do think Ethereum has it. Like, it's like a very important component, like this geographic neutrality and not like being dependent on one company. I think like there are many ways in which you can improve things that actually don't compromise on this. Like, I think like, for example, Tim spoke of checks and balances, and I think like we have the most important check and balance in place, which is the Ethereum like community that runs nodes and like is like makes an independent decision to make an upgrade. And so even if like there's like a process that like say is directed in some way, there's always this kind of like last resort of like, well, if you really disagree, then like we can stop at that point. And so I do think that like we can play more with the balance between those two, and I would like to like do that more, to like be like, well, like the actual process of like deciding on the upgrades can actually have like much stronger direction and doesn't have to be like the super neutral. I think of it maybe a little bit like a state or something, right? There's different organs where the executive is very centralized, and it's acceptable because you do have other parts of the state that act as a check on that. And I think like long term we should try to move more in that direction, and I think we'll be stronger.
Are you a Donald Trump fan as well? Is that what we're hearing? No, I'm just messing around with you. Certainly not, I would assume.
Guys, real quick, I know we're running out of time, but Devs Connect coming up in about a month and a half. What are we most excited for?
Tacos for me.
Tacos and BA? What do you got? Anyone? Ethereum World Fair? I don't know. I'm pretty stoked for Dev Connect. I've never been to Argentina.
Yeah, I think just having everybody in Buenos Aires, having all the application builders, I think that's that'll be great.
And for Sapka? Okay.
I think, the week being centered around like stuff that's built on Ethereum and how we grow the community, I think will be super cool. And yeah, it'll be unique in terms of the scale. And also Argentina being somewhere where just crypto is used extensively already, and there's like a really strong appetite by people there to like integrate this into their lives, or share how they've already doing this, or how they're already doing this. Yeah, that's super exciting.
I agree. I think it's awesome to have these types of conferences in places where you really see the real material use of the technology for a greater good, economic, social, etc. Josh, Tim, Dankrad, appreciate your time. Three-headed beast at the EF doing great work. We really appreciate it deep down from the Ethereum community as ETH holders, as longtime users, as part of the social layer. Thank you for your time. Look forward to hanging out in Argentina if you'll be there, and happy to have you guys on whenever you like to give updates periodically. I think that the community really enjoys it, so appreciate it.
Thanks for having us.
Thank you, guys. We'll see you next time.
Bye.
Bye-bye. All righty, Rob. What a session.
Dude, I think we're aligned.
You think we're aligned?
I think we got a EF alignment here. Got to scoot my chair back in after that wide shot.
That was a fun conversation. I mean, those guys are they're just so smart and have a lot of really intelligent things to say. And I mean, Ethereum is just going in a really strong direction. I mean, let me remind everybody that 6 to 8 months ago, the sentiment around ETH, the token, was absolutely terrible. And as of recent, it's been very, very positive. But that is just on the price, and that is what the sentiment usually does, in response to the price. But the shipping hasn't stopped and won't stop regardless of the price. But I think now we're in a much better spot with the vision, the agenda, the roadmap, the technical architecture, required to get there. So yeah, it's definitely had quite a bit of ups and downs there through the bear market, I think, with regards to the broader macro environment, with regards to FTX, Celsius, lending, like Genesis, that affected everyone, and then also some of the roadmap things. But guys, maybe we're not out of the woods yet, but it certainly feels like it.
One thing I'll say is that these guys could have bent the knee to the alt L1 and that entire thesis. And you even hear them, it's on their minds. Like they're thinking about how these other L1s have a more centralized governance structure. They are able to coordinate around decisions a little bit more easily because it's more centralized. And, that's a blessing and a curse for Ethereum. They are very committed to their neutrality. That is their superpower. They've already done the hard work of staying decentralized and neutral in the beginning. And you heard Tim say that now this neutrality is compounding. And I think now, it's been tried before, but not as well executed as Ethereum. There is not another neutral L1 out there.
Well, you made a good point. Like if you start in a hierarchical fashion, it's really tough to get out of that.
Yeah.
And so maybe it was a disadvantage for Ethereum to start in the way that they did. But, at the end of the day, hopefully it ends up being a strong power law return where over the next 5 to 10 years, these decisions, and I think they're already being recognized as such, but these decisions end up being recognized in a really positive way due to the types of people coming on chain. Up next, guys, we've got Dan Ellitzer, investor at Nascent, a good friend of Ellie from Starknet. I met him at his dinner in New York, first time on the show. I love when people say long time listener, first time caller. It makes my day. Hopefully Dan will say the same. Dan, welcome to the show, man.
Hey, thanks, man. Again, yeah, absolutely. Long time listener, first time caller. So thanks for having me on.
Feels like we're a radio show back. We've got a soundboard.
Hey, retro is in, man.
It got
brother.
confetti popping on the screen.
Welcome to the show, first time, Dan.
Welcome to the show.
Yeah, man. So Rob and I, well, it's not my first time meeting you, but Rob's first time on the show. Quick intro about yourself, what your specialties are in investing, how you got here a bit, and kind of what you're up to at Nascent.
Sure thing. Well, I got into crypto back in 2013. I started the MIT Bitcoin Club as a grad student there. We did an airdrop in the fall of 2014 along with my colleague Jeremy Rubin. We gave $100 in Bitcoin to all the undergrads at MIT and tried to see what we could do to bootstrap the ecosystem there. So I interned at Circle that summer right before they launched, and then spent 5 years at the design firm IDEO, where I was the kind of blockchain subject matter expert. We worked with Citigroup and NASDAQ and Fidelity and all these guys back in 2015 trying to figure out what blockchains were good for beyond Bitcoin. And we ended up deciding to raise an early stage crypto focused venture fund, IDEO Co-Lab Ventures, at the beginning of 2018, and was doing that for a few years. And then in 2020 started Nascent. So Nascent, I also have continued doing this early stage crypto venture, particularly around DeFi and anything finance related, but we don't really have anything crypto related that's fully off limits. But we also have a liquid portion to our fund as well. And we've got a fantastic team that we're very active both on and off chain, trying to use the tools that we're investing in because we believe this is the future of finance. And so if we believe it's the future, it would be pretty silly to just write checks and sit back and not actually be using the thing ourselves.
Yeah, I mean, we can go on and on about VCs not having any on-chain experience, but we're not going to get there. Dan, let's talk about some of the happenings this week. One, Base Network token came out, announced, and we had Frank Chaparro on yesterday talking about how he thinks about, as a Coinbase bull, the split between Coin, the equity, and Base, the token. Curious, Robbie came out and said, look, I think it's going to be the highest valuation L2 token out there. Obviously, people are excited about it. Question to you is can Base avoid becoming just another kind of L2 token without any kind of real product market fit or like flows or kind of revenues? We've seen a lot of the governance tokens kind of per se in the previous regime when they were launched as a result of that. Or is there a real path for that to be a sustainable, long-term thing that actually brings value to Coinbase, doesn't dilute Coinbase shareholders? How do you think about this?
A lot of questions wrapped up in there.
Yeah,
I think, ever since they announced Base in the first place and they said no plans for network token, I think all of us who are paying attention was like, really? You think Brian Armstrong doesn't want to have a stock called Coin and a coin called Base? Like, come on, it's too obvious. So I've been expecting to see this in some form for a long time. I'm glad they're publicly admitting that they're considering it and working on it internally. But to be honest, we really have no idea what it's going to look like. I think, a friend of mine, 𝘗𝘯𝘓𝗂𝘗𝘓, put out a tweet the other day proposing this kind of like aerodrome inspired model that they could use. I think that would be very cool to see something like that. I hope that whatever they choose, they do something a little bit differently than what we've seen before. That said, like, this is a very big thing to take a shot on. If I had to guess, it's already a big leap for a publicly traded company to go and like issue their own network token. So I don't know how much they're going to be the first mover on any kind of new economic structure with the token. And I still think there's a good chance we're years away from actually seeing anything launched. I think Coinbase is very good at sitting there and following and staying up on what's going on in the ecosystem, and then finding the right partners to work with, the right models to copy. They were the first one. Well, I guess arguably there's BSC, right? But they were the first exchange to do their own L2 and really kind of push that in recent years. And they learned from what other people did. And then they chose Optimism to work with them and build on the OP stack. They weren't going to go build it all from the ground up, right? They didn't do their own lending protocol in-house. They partnered with Morpho. So I think they're going to take the best of what's out there for the token model as well. And maybe they'll partner with someone. I know they're very close with Aerodrome when you had Syndicate and Aerodrome on earlier to talk about how that worked. So maybe they will kind of copy that and work with some known partners in the base ecosystem. But again, I think we're still a ways out from seeing anything definitive and ready to go live.
That would be insane if Coinbase does the same token launch model, this lock drop model that Syndicate did on Aerodrome. If they did that for the base token, all bets are off. I mean, I don't know, Dan, if you saw.
Dude, Dan's probably right. I mean, Dan's got something. Dan's talking to the right guy.
LP.
Yeah, well, look. I mean, look. I don't have any inside information on Coinbase. I've got a lot of friends there. As far as I know, none of them are even involved in the conversations around a potential token. But you know, I'm friends with the Syndicate guys. We were early investors in Syndicate as well. I've talked to them about that. I thought it was really cool, very community aligned. I definitely encourage them in that direction to do something. They came up with the whole model themselves.
Wow.
But the idea of building something and doing a distribution that was community aligned was something that we had conversations about, that it's been part of their ethos from day one, even above and beyond most of the teams in the space. And so I'm just thrilled that they came up with something and found such great partners to do something that really has just been part of the idea from day one. Because I don't know how many people were following Syndicate early on, but their initial thing they were going to market with was these capital syndicates, ways that people could pool money together and collectively invest in things early on. And so it just would have felt like such a huge miss if they launched a token and not had this broad community participation opportunity.
You know what's crazy is he's the Syndicate founder and the Aerodrome founder both said that it's actually the opposite of what you saying, or what you're saying here, Dan, which is that a lot of the VCs, investors, market makers, and centralized exchanges of the teams that have approached Aerodrome to do a similar model have all pushed back so hard that the founders have copped out in the last second of doing this model.
Well,
isn't that something?
I've known Ian for over a decade, and Will about the same amount of time. So we're more friends than professional relations at this point. And we just we talk about it. It's like, what would be the coolest thing to do, right? And like ultimately, if Syndicate doesn't work out as a project, the token's going to zero or close to it, right? For all these tokens, that's how it is. So take the big shot, do what you're going to be proud of, and trust that if you do something that's not stupid and you execute on building out the product and building out the community and building out the protocol and continuing to advance the technology, that there's going to be a way that it's going to flow back into the token, even if that's not what the initial plan was. It would be pretty hard to be successful on the project side and not be able to have a way where that's reflected in the token over the long term. Yeah. No, I mean, I think that the model was very, very interesting. Really reading I think I read a blog about it. It felt like I was reading a DeFi Summer 𝘗𝘓𝗦𝗡 Medium article. Are we going to talk about Andre and his new stuff? I don't know how much of it's public yet, but man, I'm getting excited.
Yeah, so I did see him tweet about it. So it's definitely public-ish. What's the state of affairs? What can you share?
I gotta be careful, but what I will say is, having talked to Andre a little bit about this, I mean, it's pulling together a number of ideas and different pieces of DeFi and merging them together in an incredibly capital efficient way. That he's talked about some of these ideas for a while, and it kind of feels like it's finally all pulling together. But it's Andre, so he's not just coming up with a really cool protocol. He also has like groundbreaking new ways of actually doing the token mechanism and stuff around that. What I think he's made public, and again, I don't want to spill anything that's not supposed to be spilled yet. But what they're doing on the private side and what's going to be available on the public side is exactly the same. And so, it's really nice that everybody who wants to participate will be able to participate on the same terms. There's not like special lower prices that like VCs or insiders are going to get here.
This is, I think, built on one of the principles that he was describing last time he was on the show, which is this idea of uncollateralized lending, but actually building out an on-chain credit score using a lot of the same math and actuarial science and principles that are currently in practice on real like credit scores using credit bureaus that are happening off chain. And what he's doing, as far as I can understand from what he has said about this flying tulip thing.
Flying tulip, yeah.
Yeah, it's like leveraged LPs. And so if you're able to get leverage from off-chain, it is under collateralized. This is kind of the golden goose that has yet to be unlocked on-chain.
Again, he's pulling in so many different things. Maybe there is an like an uncollateralized portion to this, but that's not
Right, we
that's
don't know
not the
that
core
for a
thing. Yeah, that's not the core thing of what's going on here. There's potential ways to maybe enable that down the road, but that's not what you're going to see as the focus on day one.
Yeah.
Right.
Dan, I'm curious what you think about Athena's kind of stablecoin as a service model that they brought to Mega ETH, right? Like again,
Yeah.
Mega ETH has had the experience to watch all these other teams kind of launch their own L2 tokens, see what's happened, see how the market reacts, learn from the sequencer stuff, learn from how to generate revenue. Then you got Athena kind of comes in and says, okay, why don't we just create a native stablecoin on like Mega ETH's native stablecoin?
Yeah.
What is your reaction to this Athena stablecoin as a service product? And why do you think Mega ETH thought this was a great idea?
Well, first of all, I'm very biased as an early investor in Athena. Like Nason participated in both the seed and the Series A, and we've been pretty involved there. I think that it makes sense that chains would go this way, right? And I think another project we're not invested, but are friends with the M0 folks, and right, they saw this coming a ways previously. So I think the idea of wanting kind of branded stable coins aligned with your ecosystem, sharing the economics, it makes sense. But if you're going to do that, you need to have the back end liquidity there. And Athena has built out fantastic infrastructure around like USDTB to enable that. So it makes sense that they would partner with them to do this and have that backing liquidity. I think ultimately that's not as interesting to me as USDE in terms of like what it ultimately enables. Maybe this allows for some partial shifting there based on governance on Mega ETH in the future. I don't know if you guys also read Athena's proposal for Hyperliquid and stuff that they put out there. And great, as I think, Guy is incredibly classy, and he put out there afterwards, like, this is what we're executing. They were trying to get the ticker that everybody was going for, but like, okay, they didn't get the ticker. Native Markets got it. Great. Native Markets team are awesome. But now they're just going to go compete. And they're going to do the same thing they said they were going to do. And again, starting with something where you just have the treasuries backing, but with the ability to think about, hey, do we want to, as people get more comfortable, shift into some carry trade, essentially backing on this and increase the yield over time as confidence grows, as volumes grow? I think that makes a ton of sense. And there's no other team out there that's positioned to be able to do anything even close to that. So the treasury thing, great starting point. But I think we should all think of it as a starting point, because that's going to be commoditized pretty quickly.
Yeah, I mean, I think the other cool thing was that not only do we have all of these people going for the Hyperliquid ticker, we had all of the community, on Twitter, just speaking their mind. They're going after Agora. They were, trolling 𝘗𝘂𝗎𝘂. We had Jeremy on the show on Tuesday. He's telling me that their circle is publicly buying hype because they have to, disclose, and they want to be a validator. And so you got like all of this activity happening around Hyperliquid's USDH stablecoin. But like the whole thing with Mega ETH kind of went under the radar because this thing blew up like right after. But it feels to me that Mega ETH may be one of the first L2s with the stablecoin model with Athena that actually has a really sustainable, stablecoin based business model outside of just sequencing fees that can maybe go back to the Mega ETH token or whatever it is. It just shows like, okay, the industry is now taking the next order of thought forward to building an on-chain business. And I don't know, I think Athena could scale this model to basically any new chain. And I think that's really exciting.
They could. I think we're going to see a lot of interesting like power struggles though, right? Everyone's realized that like, hey, being able to make money on the float is a freaking great business. Look at what Tether has been able to do with like 100 employees or whatever, right? It's just, it's an amazing, amazing business. And so if you've got a lot of dollars sitting there on your chain, yeah, it makes a ton of sense to go do that. And we've seen, right, Solana is talking about trying to like band together applications and go do that and do a share. But I think the question is, how much of that is going to be able to stay at the chain level? How many applications are going to be native to one generalized chain, whether it's an L1 or L2, versus they're going to multi-home on different chains, or they're going to have their own app chain? So how much in the long run is Mega ETH going to have a dozen, 2 dozen, 100 different applications, all with a relatively similar amount of stablecoins sitting there who are going to want to use that? Or are the largest ones going to start negotiating their own economics to internalize the float on the tokens that are being used in their application? Right. So I think the game is far from over. We're so far from establishing what's the dominant model or strategy here. And so I think you just got to look and see who do you want to work with, who's going to be here long term, who's going to be able to move fast, but also knows how to do the important things on compliance and institutional integrations. And I think that the Athena team has really proven that they know how to do that, because there's nobody else who has worked with big institutions, enabled these partnerships, and grown at the unbelievable speed that they have. Right? They just crossed, what is it, 14 billion today or yesterday? Like, that's just nuts. And that's in about a year and a half that they got there. That's wild.
Yeah, it is. I mean, just tremendous growth. Congrats on that investment. Andy and I didn't get that one.
That was like the one that we fumbled the most, I feel like, in the bear. We had every other good one, I feel like.
You're not alone. I've talked to a lot of investors who I respect who just didn't see it. I think one of the reasons we did is we'd actually made a bet on another team that was trying a similar model on chain a couple years earlier, and it just hadn't worked. And so we'd already been spent a lot of time thinking about this, and it clicked for us that the centralized exchange piece could be the unlock. But I know a lot of really smart people, just there were a lot of reasons to doubt it. And the team has just executed incredibly well.
Athena's 14 billion, Tether's 170 billion, Circle's about 75 billion. Then the list kind of goes down from there. We just had ARK, Tempo announcements. We got Google L1. We know Plasma mainnet is coming, I think, next Thursday, 8 p.m. Eastern or something like that. And we know Stable is also in the running.
Yeah,
I think Plasma is probably category leader. I'm biased. Our fund did do that one, so we're excited about that. But they're going to be first to market. They were kind of like the first to create this idea, or at least do it publicly. Dan, have you guys participated in any of these deals? What is your take on this entire happening?
We participated in Stable. So, I think we're looking at this. I think we probably on the liquid side, we've probably been playing around with some Plasma stuff as well. I'm excited to see what this looks like. I think there's a distinction maybe between folks like Plasma and Stable who are taking, I think, a little bit more like crypto native degen thing. Like, they're absolutely going for institutional integrations and plays as well, but they're able to run, I think, a little bit more of the yield farming playbook and stuff that we've seen and has been established. I wouldn't expect to see as much of that from ARK and Tempo, although, who knows? And I think a lot of it is going to be like, okay, what is the dominant or relevant strategy at this point? Is it building up the crypto native capital? Are you able to go straight to the more established institutions who have a lot of existing business and customers that they could potentially pull on, or do you need to bootstrap it first on the crypto side? I don't know. We're gonna find out very fast. Ultimately, you're gonna need to have large institutions and customers coming in. The question is, what's the fastest path to actually getting them to do it for real usage? Not just marketing, not just like, hey, we want to put out a press release together and say we're partnering on this, but who's actually going to move core business functionality and customers on chain?
Dan, I have a bit more of a general question. I think it spans both the previous topic with respect to Athena's stablecoin on Mega ETH and also the stable chains. We're seeing this pattern of verticalization. And Hyperliquid with the native stablecoin, Mega ETH with now their native stablecoin, and the same is coming from the more traditional business models that are also now incorporating their own chain with the stable chains. It used to be, decentralization, kumbaya. We want to build an open platform, permissionless, everyone can build. Now it's like, okay, maybe it's more practical. Like, we want these core business functions, we want to own them, and we want to monetize them. How do you think about this this phase shift? Is it an ideological one, and what are the knock-on effects? I think we kind of see it just from an observational perspective, but do you have an edge on this, an angle? Like, what's your take on why this is happening, and what could result from this happening?
Yeah, I mean, I think there are advantages you get from doing some tight integrations, right? I wrote something back in, I think it was 2020, about this idea of kind of like almost like prime brokerage protocols, where you were going to start to pull together DEXs and lending and derivatives and like everything to be in one place, tightly integrated for the most capital efficiency. So it makes sense to me, like you're going to start pulling together some of these seemingly disparate parts of the stack and wanting to like eat each other's lunch. That certainly is a great way to get margin now. And then we are seeing some other teams say explicitly, like, we don't want to do that, and still pursuing it and doing very well. A prime example of this would be Morpho, right? They've stayed very in their lane, even within lending, saying we're just doing this base level protocol, and they haven't tried to move up the stack. They haven't tried to move further down the stack on a chain side, right? They're just saying like, here's what we're going to do. And that's worked incredibly well for them in terms of attracting some real premier partners, because they are able to see by the track record that has been developed that these guys are just staying in their lane. And so that credible neutrality and their commitment to where they want to play has worked out very well for them. But I do think it's very tempting, right, to go and to say, oh, I see these margins our partners are getting. We're big. We're just going to go eat those. So I don't think we've seen the end of that. But when everybody starts going full vertical, the question is like, well, okay, well, what's the differentiation going to be? Is it brand? Is it just customer experience and everyone's going head to head with everybody? Like, maybe. I think what is exciting to me, even if some of these teams start splintering off more with their own chains and stuff, is that at least they're chains, right? If we look at what's happened in traditional financial services, where everyone's like trying to in-house, like, and you've got your banking and you've got your your brokerage and your credit and everything, like trying to keep you all in their one ecosystem, it's really hard to move between them. You kind of get locked in. Once you get these companies and these projects, everybody doing stuff on chain, it really lowers the barriers to being able to move between them. It's that I think forces them to stay a lot more customer focused, and it allows them to essentially upgrade and integrate new products and services and things at a much faster rate. So I think it is just a net win for consumers to have the financial world be moving on chain, because we're all going to be better off as a result.
That makes a ton of sense. And I realize we're running out of time, but you actually wrote, someone on your team wrote this crypto AirTag moment on your website.
Yeah, that was me and Peter. Yeah.
That's awesome. And that highlights what you're talking about with zk-TLS. We've also talked to a couple projects that are using zk-TLS to almost vampire attack some Web2 protocols.
Yeah.
They'll make partnerships with like airlines. Delta wants JetBlue's customers, right? If you can prove that you're a JetBlue loyalty member, Delta is going to offer you. And it's no longer a walled garden. I can imagine this for finance. And right now, maybe it's a little bit still too closed off. Maybe it's not with zk-TLS, but between some of these different banking lines, once these things are on chain, it makes things so much easier, and zk-TLS becomes that much more powerful. So maybe just to close us off, could you just, after looking into this vertical that is just emerging, but seems to be really powerful, what were some takeaways or breakthroughs that you had while doing that research?
Yeah, so the zk-TLS or web proof stuff, right? And I want to use web proofs because it's broader, right? zk-TLS is a specific way of doing things, but like zk email and stuff is also really interesting. But the core there is when you think about what we've been doing in crypto so far, we like the verifiability, right? And the proofs that you're able to generate. Those come because it's on chain and we can publicly verify anything that occurred on chain. What web proofs are about are being able to prove stuff, prove data from off chain, right? Any digital data, you can prove the source that it came from. You can't prove it's true, right? You need Chainlink or other Oracle services if you want to like kind of get to truth from a variety of different places. But if you want to be able to say, yeah, that this service says this thing is true about me or about the world, I can prove that even if they don't want me to be able to. As long as I can digitally access the data from that service, I can bring it on chain and prove to everybody else that, yeah, they said this, can't take it back, right? And so that idea of like, you don't have to ask for permission first. That's the huge unlock here, right? Permissionlessness as a default for all data, that's the huge unlock from web proofs and zk-TLS.
Sounds scary though, Dan. Like, sounds like my data is just going to go wherever. But at
No,
least
no,
it's you, right? It's like the data that you share with somebody else, right? They can
you still have
prove
permission to share it.
that. Yeah, but,
Right.
but it's not like your data is all public. It's just if that data is shared, the integrity of that data can also be proven.
be verified.
Right.
Yeah.
Right.
Yeah.
Right. So it's not just like, oh, here's post a screenshot. It's like, okay, that could be edited, right?
Right.
Everything now comes down to digital signatures because we know images can be edited so easily nowadays.
And
Now we can
videos.
actually prove, right? Like in math, we trust.
Yep.
Yeah.
I was talking to the 𝘂𝘂𝑚 guys who are trying to do this as well and talking to them at Basecamp, and they're basically making offers to everyday people. They don't even know they're using crypto, but Amazon will put up a bid for $10 to give you access to your Shopify account, for example, right?
Yeah.
And so they've kind of built out this entire marketplace where they'll just pay you, right? So when we have these permission pop-ups on our phone, we'll press yes, we'll give them our data for $10 or something like that. Real people are using that. So Andy, you still have access. You have the ability to say no, I don't want to give up that data, but you can also say yes and get paid for it.
Yeah.
And Dan, real quick, just to close this out, like, what is the then what of that? Like, okay, so I get that the permissionless sharing and verification of basically like removing the walls from different apps and silos on the internet and in the banking system is the thesis that just then drives an unparalleled amount of commerce and activity that was previously kind of burdened by the system?
Absolutely. I think one of the things that we've gotten incredibly good at over the last decade in crypto is incentives. And we've been able to provide direct financial incentives off data that we can verify on chain. What we're now able to do with this technology is provide direct financial incentives off any data, even off-chain data, right? You want to reward somebody for listening to a song or watching a show or viewing an ad or making a purchase. You can now do that, right? And that ability to have essentially permissionless financial incentives, I think is going to be a huge unlock. We're going to see these vampire attacks. We're going to see new forms of like verifiable advertising with things like 𝘂𝘂𝑚 and others. Like I'm super excited about that because we've gotten very good at the incentive games.
Yeah.
Great. Let's take them everywhere and not just play in our own little sandbox. The sandbox is now anything digital and everything is becoming digital.
Bang. Nascent VC. Absolutely dialed. Dan 𝗂𝘂𝘂𝘚, have a great weekend. We appreciate your time. It's been a marathon of a day for us on the stream. Probably wrap it up here. And
thanks, guys. Impressed with the endurance. What way to go.
Yeah, appreciate it,
Thanks,
Dan. Always a pleasure, man. See you soon.
Thanks.
See you next time.
See you, buddy.
Next time.
Alrighty. All right, Rob. What a sesh, man. Have a great weekend, bud. Go get some. Have a good flight to Korea, bud. Don't make sure you take one like a sleeping pill or something, bud.
All right, buddy. You just keep asking these core EF representatives who their political affiliations are with.
All right, buddy. I will do that. Let's see how they do it. See how they take that one.
Have a good weekend. We'll see you in Korea.
Later.